At the Conservative Party conference in Birmingham with Francine Lacroix in London.
And here are your top stories. Twitter troll Elon Musk revives his $44 billion offer for Twitter just days before a contentious courtroom fight is set to begin. Slashing production, OPEC may actually agree its biggest output cut since the start of the pandemic. U.S. futures dip after stocks staged their biggest two-day rally in more than 2 years. Plus, on the ropes, embattled Liz Truss is set to deliver her keynote speech, hoping to reboot her premiership. We're live with Tom at the Tory conference in Birmingham. But let's take a look at the futures. And again, all of this is in the prospect of higher inflation, of course, what central banks will do. So European stocks, for the moment, those futures down 0.5%. We did see also Asian stocks earlier on playing catch up to the U.S. So it does seem that Europe follows the U.S., but actually that was a little bit short-lived. So the boost that we had yesterday began to fade as fledgling hope the central banks will not do too much to actually deal with inflation, that they would temper the pace of interest rates increases slip further from view. It seems that one day they think that they'll be quite aggressive, and the other they kind of reassess the situation as we get more data. All right, the FTSE is just opening up. Of course, the story here is Liz Truss delivering that speech a little bit later, 0.5% lower. The other stories, of course, what we're seeing in some of the periphery, the Spanish 30-year, the Italian 10-year, and how that compares, for example, with Germany at 1.94 for that 30 10-year. But you see equities, a bit of pressure overall. I'm losing my voice because we've been following the conferences so much and all these speeches that you kind of wonder how much you can shout at the television station. U.S. 10-year yield at 3.6589. Now, Tom, I know you're at the party conference, and of course they must be looking at gilts and pound. What, on a weekly, monthly, hourly basis?
Yeah, indeed, and we'll wait to see in terms of the Prime Minister Liz Truss's pivotal speech. I think it's fair to say it is pivotal, whether she can reassure the markets. A number of tasks then for the UK Prime Minister. One, she's facing divisions not just within her own party, they are well documented, but within her own cabinet as well, whether that speech will able to heal some of those wounds. But you're absolutely right to say that there will be messaging you would expect, an attempt to reassure these markets. The pound is back at around 114, gilts have come off in terms of the yields, but many analysts, economists, of course, and investors we speak to say that's going to be short-lived. So she wants to see what she described as a new Britain in a new era, moving away from a high-tax, low-growth economy. We'll wait to see if there's any additional details in that speech at around 11 a.m. Here in Birmingham.
Tom, short sellers are being forced to stand down as market expectations grow for a slower pace of central bank tightening. This has led to the best two-day run for the S&P 500 since March 2020 and the strongest session for European stocks in 6 months. Now, equities opening on the back foot again today. Joining us now is Bloomberg's Christina Kino and Maria Weitmane, senior multi-asset strategist at State Street. So thank you both for joining us. Maria, what kind of markets are we looking at? Are you bullish at the moment, or are we going to see a big correction because of what central banks need to do?
Good morning, everyone. I think I'm definitely not bullish at the moment. I'm very concerned, and we've been concerned for quite a while. We worry about inflation not budging very much. We worry about still excess consumer savings. They're running down, but they're still there. Labor market concerns are very, very dominant. We had one kind of numbers that kind of shake this kind of concern sentiment about strength of labor market. Let's watch. For us, not much has changed yet. We want to see more signs of inflation slowing. We want to see more signs of labor market slowing. We're not there yet, so still bearish.
And Christine, we're going to get more labour market data, of course, on Friday, the crucial non-farm payrolls. But some of the data out of the US is suggesting now that these rate hikes and the tightening of financial conditions, that is starting to have an impact. So how much should investors read into this softening data?
Well, Tom, I mean, at this stage, it's difficult to do much reading, really, because, again, I think what investors are really looking for is that sustained trend, as Maria was alluding to. And so it is encouraging that we are starting to see some of the data rolling over. Some of the heat in the labor market, in the housing market, looks to be fizzling out, and that is potentially good news for Fed policymakers. But even they themselves have emphasized that just because, you know, we're seeing kind of signs of interest rates working through the economy doesn't mean that they're going to be relenting that pace and magnitude of rate hikes that they've already telegraphed. And in a lot of ways, kind of backtracking on itself would probably be more damaging for the Fed's credibility and how markets have kind of prepared themselves and priced for the eventuality of more Fed rate hikes if they kind of took a U-turn and said, oh, you know what, just kidding, we're actually close to done now in this cycle. I think that would probably be more damaging than kind of just continuing on the path that they've laid out for themselves.
But Maria, so what will it take actually for the Fed to have a more Aussie-style approach, so less aggressive when it comes to hikes?
As I said, two things we are watching very carefully are labor market, and yes, I mean, we talked about JOLTS number. I mean, it's not a kind of a prime number that market used to watch, but now every labor market indicator is very, very important. So we need to see. I mean, unfortunately, what Fed is set out to do is to slow down economy, slow down inflation. How are we going to do it? By slowing down labor market. So we do need to see some weakness in labor market. So all eyes on payroll on Friday.
Maria, how would you characterise the credibility of this UK government, and what will you be looking for from the Prime Minister, from her cabinet, to reassure markets?
Oh, that's a very good question. Very, very challenging situation. And I mean, what concerned market a lot is kind of the proposed package of almost 45 billion pounds on kind of stimulus, tax cuts. And so far, they have U-turned on kind of the most, I would say, contentious tax cut for higher earners, but that's only 3 billion pounds. So we still have a very, very substantial package that's proposed and not funded. Or, I mean, we don't yet know how it's going to be funded. So that's a really, really huge question. So now they're in discussions with OBR, and it's brought in, and it's very difficult for OBR to issue anything but quite a dire report in terms of how we're going to pay for this.
So, Maria, when do you start buying gilts or sterling?
Not yet. Definitely not yet.
So do you wait? I mean, do you wait for a signal, or do you actually need some kind of different action, Maria? Or is it just something
I think we
need
need different action. I mean, right now, what market is basically telling us that the package is not funded. We don't know where we're going to get money. And I mean, it was fantastic that Bank of England stepped in and stopped kind of the collapse of like almost like pension market financial system. But I mean, it's really tricky situation because they were supposed to start quantitative tightening on, I mean, by the end of the month. That's been postponed and they're not doing it. And instead they are forced to go and kind of restart QE. So that's really not what they wanted. That's not how we're fighting inflation. So that's really not an environment to get more positive on either sterling or gilts.
Yeah, that's fair. And Christine, when you look at that, is this a warning sign for other countries? And so does it shift policies, for example, in Italy and elsewhere, or do you just look at it through a UK perspective?
Well, definitely the UK experience is creating a lot of caution for other governments, Francine. I mean, yeah, I think really the heart of the issue here is that fiscal and monetary policy seem to be diverging quite a bit when we got that initial mini budget plan from Kwasi Kwarteng, because it essentially kind of a little bit defeats the purpose of monetary policy, which is to curb inflation, when you have, on the other hand, fiscal policy that stokes that very inflation that the Bank of England is trying to curb. And so I think for investors, you know, I agree with Maria. I think investors really are looking for more in terms of the UK government kind of backtracking on some of those very inflationary fiscal policies, and really kind of seeing more of a return to convergence between fiscal and monetary policy. I think that would go a long way in reassuring investors that the UK is back on track.
Yeah, and just having a quick look at gilts now at the front end, that's a move higher by about 13 basis points for two-year gilts, just to your point around the market sensitivity, of course, the policy making here in the UK. Bloomberg's Christina Keno, thank you, and of course Maria Weitmana, senior multi-asset strategist at State Street, who is staying with us. More calls from Maria in the next few minutes. Coming up, Elon Musk's blockbuster deal for Twitter. It is back on the cards. We have the details. This is Bloomberg.
Thanks, Christine.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Today's CFOs are reshaping the C-suite, breaking out of traditional roles to become Chief Future Officer. Global logistics is complex. It takes plenty of capital and plenty of focus. Deutsche Post DHL Group CFO Melanie Kreis makes sure her company has both.
My role is essentially saying what is working well in this company, where do we have challenges, and what should we do going forward.
Chief Future Officer, Wednesday on Bloomberg. Brought to you by Workday. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open. We're 11 minutes into the European trading day. I'm Tom McKenzie here at the Conservative Party conference in Birmingham. European equities giving up some of the gains of yesterday. The benchmark currently down 0.4%. The context, of course, is that US shares saw their best two-day rally since March of 2020. Futures, though, stateside pointing lower as well by 0.5%. And you've got selling on the gilt market as well. Pronounced at the front end, the two-year currently trading at 4.02. That's a move higher in yields by 10 basis points. Francine.
Now, Twitter shares, Tom, soared after Elon Musk revived his bid to buy the social media company at the original price of $54.20 a share. Now, the move reverses his previous efforts to quit the deal and potentially avoid a contentious courtroom fight. Now, Bloomberg had the story first, which was then confirmed by a letter Musk filed with the SEC. So, Bloomberg with the scoop. Joining us now is Bloomberg Quick Takes Alex Webb. Alex, I'm grateful to speak to you because I have a million questions on whether he's doing it because he really wants to buy it or whether it's just a clever way to get out of the courtroom.
If
only we were in his mind.
It's not quite as binary as that. I think it was certainly not looking good for him as it came, as far as the court case was concerned. That there had been a number of preliminary hearings, about half a dozen. He had lost all of them. It seemed as though the judge was siding more with Twitter and focusing very much on the key question: did they break the merger agreement? And if it comes down to just that and not this sort of bots red herring that Elon had been trying to raise, it didn't augur well for him. Now, does he then want to sit in a courtroom, sit on the stand, his feet held to the fire, more discovery, turning up things that perhaps he doesn't really want the wider world to know? We've seen some texts which give a glimpse into the way he operates over just the past few days. Maybe not if you're likely to lose the case anyway, and so perhaps that explains why this is happening.
So Musk also alluded to the possibility of turning Twitter into, a kind of WeChat-like, which you pay, you talk, and do everything like that. Are there any barriers to entry?
We don't have anything like that really in Europe or the US, and one of the reasons for it is regulatory, that it's very hard to share data between different products and services unless users give their consent or there's a compelling reason. And secondly, particularly in Europe, the European Commission doesn't particularly like it when you leverage strength in one market to generate strength in another. That's why Google has paid billions of dollars in fines over the past 5, 6, 7 years. The question with Twitter, though, is does it have any strength to leverage? It isn't the dominant social media player. Maybe that means it's actually easier to think about turning itself into a super app, as long as you can convince developers and companies to bring their products and services to the 200 million or so users that use the app today.
Alex Webb from Bloomberg. Quick take, thank you very much indeed. I have my WeChat open, Alex. It's a legacy of my time in China. And as you say, and as we look at, you can order, I can pay my utility bills if I was still in China, buy cinema tickets, I can get live streams of news, all that kind of stuff. This is the super app that maybe Musk is trying to emanate then. That's WeChat. Let's talk about what is happening more broadly then in terms of the leverage that's come to play within this deal for Twitter, and bring back Maria Weitmana, Senior Multi-Asset Strategist at State Street Global Markets. Maria, I have a question because I know you're bearish on banks, and we talk about the leverage and maybe the hit to some of these bankers in terms of the funding that they're going to have to stump up for Musk and this deal. How concerned should we be about the squeeze within the banking sector with some of these deals?
Oh, I'm generally very, very concerned about banks, even before the deals. For me, the key question is how difficult it is for banks to make money. We lived through, almost a decade of very low interest rates, and we're all saying, okay, if only we have higher rates. Now we're finding it's not just higher rates. We need a steeper yield curve, and that's proving challenging. So very difficult for banks to make money. It's very difficult to increase net interest margins. We're still at a very, very low end of those. So that's challenging. I really worry about the idea of how to get fee income as well. So we know IPO market is stalling. We know that debt issuance is challenging. So it's really, really difficult environment for banks to make money. And they stopped being super cheap. That's a challenge. People expected them to do well. They got repriced end of last year, beginning of this year, and money are not coming in. So that's a challenge.
So, Maria, you're saying stay away from banks, industrial, food, retail, but you also like energy, healthcare, and some U.S. stocks. How long do you like them for before there's a correction in those as well?
You're absolutely right. So those are kind of relative preferences. So if I did have to buy stocks, I wouldn't. But if you are running long only portfolio, you need to look for relative preferences, and you are looking for areas with better cash flows, with more stable margins. So healthcare is our favorite defensive sector. We are happy to see really good free cash flow generation. That's important for us. Energy, again, if you have to be in cyclicals, or if you want to find something cyclical, energy is interesting. It's still, traditional inflation hedge. We are really interested in free cash flow again, we're ability to pay dividends. So those things are important for us. So we're trying to find kind of better looking equities within the market, but that's a relative call. Absolute market view is quite bearish.
Maria, would you look to add mega cap tech in this environment, given the valuation squeeze across that sector?
That's the most difficult question. I used to love tech a lot. And what we're seeing this year is underlying fundamentals almost don't matter. What matters is kind of macro headwinds and tighter financial conditions, which generate multiple compression, particularly for the long duration stocks like mega cap tech. Very challenging environment. So I think once we start seeing that, okay, we've probably kind of broken the back of inflation, and we can start thinking about Fed pivot, and by that I mean kind of pause, not cuts. So once we get there, then underlying fundamentals will start being more important, and then large cap tech would look very interesting. So probably not story for this year, maybe early next year.
Maria, thanks so much. Maria Weitmane, their senior multi-asset strategist at State Street Global Markets. Now, coming up, OPEC Plus is considering its biggest production cut since 2020. We're live in Vienna as cartel members gather for the crucial meeting. That story's up next, and this is Bloomberg.
Now they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Welcome back to the Open, everyone. We're 21 minutes into European trading day. A bit of pressure across the board as now markets are betting that inflation fighting is the #1 priority for central banks and that they will probably stop at nothing to get it under control. Now let's get straight to the Bloomberg Business Flash. Here's Alice Atkins. Hi, Alice.
Hi, Francine. Ray Dalio has given up control of Bridgewater Associates, the firm he built into the world's largest hedge fund. The billionaire co-founder transferred all of his voting rights to the board of directors and stepped down as one of Bridgewater's co-CIOs at the end of September. The move marks the end of a succession process which started back in 2010. Micron plans to invest up to $100 billion over the next 20 years to build a memory chip factory in upstate New York. The company says it'll get about $5.5 billion in state government incentives for the plant, which will generate some 50,000 jobs. It comes as the U.S. boosts incentives to reduce its reliance on Asian chip suppliers. And Emerson Electric is said to be in talks with Blackstone to sell at least part of its commercial and residential solutions business. If the transaction is agreed, it would mark a sizable private equity deal in an increasingly difficult environment. A deal could be worth between $5 and $10 billion. That's your Bloomberg Business Flash. Tom, Francine.
Alice Atkins in London, thank you. Now, OPEC Plus is set to discuss an output cut of as much as 2 million, yes, 2 million barrels per day when the cartel meets in the coming hours. A crucial meeting then. Let's head to Vienna, where Bloomberg's Manus Cranney is standing by. Manus, it's been a long time since they've had an in-person meeting. Why the hurried gathering then this time round?
I think this is about progression and regrasping the narrative. The Saudis warned on August the 22nd. It was a warning shot to the world that the markets were broken, that what was going on in the futures prices, Tom, Francine, relative to the real world and real supply situation was broken. It was dysfunctional. That was a verbal warning shot. We're now moving to broadside action, which is galvanizing the power and the might of the members of OPEC Plus coming together. So we've gone from 5-minute rubber stamping meetings to an all-in, all-person, readying the market for a monster move. We've moved from 1 million barrel a day cut yesterday when I was getting on the plane in London to 2 million barrels a day overnight. And people are even speculating there may even be an additional move, unilateral move by perhaps Saudi or the UAE. Mazrui, Al-Mazrui, the oil minister for the UAE, at the Kapinski around the corner. It's the only line we've got out of him so far. This is an important meeting. The table is getting set. It's going to be a pretty big, monster, pivotal moment for the Central Bank of Oil.
Yeah, Manus, the problem is given the scale of the cuts, and we're now hearing 2 million per day, you wonder what do they know that we don't?
Well, think of the market context in this way. Why are we here? They are concerned, deeply concerned about a global recession. We all are. We're looking at the ISM numbers. We're looking at the JOLTS numbers. We're looking at the jobs numbers. So we're all paranoid about the state of the global economy and the pending gloom. That is the downside risk. The upside risk is, of course, that Russian production could fade, more sanctions will come to bear, that could squeeze the market higher. The Russians are going to be here. Novak is going to be here on the ground, in the heart of Europe, the oil man from Russia, the deputy prime minister. The perhaps nuanced twist here is the apoplexy in the White House. Let's listen to Rapid Energy's president, Bob McNally. They're in full panic mode.
They are in full panic mode. Democrats have thought they got a reprieve when oil prices fell. They're facing very difficult elections in November. That oil price drop has been a blessing. The last thing in the world they want or need is anything that causes prices to start marching upward again.
Full panic mode. More emergency releases to come from the SPR. Not tomorrow, not next week, but that's on the agenda. Exports control from the United States of America for refined products. That would be an own goal. Congress. And the one phrase that strikes angst in some of the main bulwarks of OPEC is NOPEC. And that's when a sovereign is up for a lawsuit. And that changes the game from Congress.
Okay, Manus Cranney on the ground for us, of course, in Austria, in Vienna, for that important meeting, OPEC Plus, and the implications potentially of 2 million additional barrels per day on the markets, and the geopolitics as well of that, particularly when it comes to the US. Coming up, it is perhaps the biggest speech then of her career after a rocky start to her premiership. UK Prime Minister Liz Truss addresses her party conference today. We are, of course, live from Birmingham for that speech. Stay with us. This is Bloomberg.
went back and looked, and very few secretaries of state in the last 100 years, or maybe ever, have really gone back into government. So why did you want to come back into government for any issue when you've got 8 grandchildren, you've got 2 daughters, you've got wonderful family? Why did you want to come back and go through this terrible process we have in Washington of getting things through consensus and getting people to agree to what you want to do?
Because I want those grandchildren to have a future. It's very simple. We're not in a good track right now. The world is not serious enough about reducing our emissions fast enough, David. And the result is that the planet is going to continue to evolve in reaction to what we human beings are doing to it, mostly through fossil fuels. Most of the emissions that are going up nowadays into the atmosphere and are creating this increased level of energy that comes from the ocean, goes into the storms, the floods, the rain. All of it is explainable, and it's all linked to the changes we are creating on the planet. So it's very simple. I wanted to come in because I think we have a real chance now to make something happen, and I think Glasgow was a major step forward in the effort to do that.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Twitter troll Elon Musk revives his $44 billion offer for Twitter just days before a contentious courtroom fight is set to begin. Slashing production, OPEC may actually agree its biggest output cut since the start of the pandemic. U.S. futures dip after stocks staged their biggest two-day rally in more than 2 years. Plus, on the ropes, embattled Liz Truss is set to deliver her keynote speech today, hoping to reboot her premiership. We're live at the Tory conference in Birmingham. Now, this is a picture overall on indices. Now, the action yesterday gaining and today on the downside really reflects some of the seesawing outlook on monetary policy as investors really scan central bank commentary to try and figure out how aggressive they will be with these hikes. Yesterday, we did have a decline in U.S. job openings, and that helped stoke a bit of sentiment on the downside, which was, of course, dimmed by comments from Fed officials who indicated that further tightening lay ahead. So we're seeing a lot of these indices in Europe down 0.5%. In terms of the sector moves, and again, this is looking at some of course, the earnings going forward. We have media getting some 0.2%, but it's really a down day with real estate, telecoms, and auto parts on the way down some 1.7%. Those are the biggest losers. Tom.
Okay, Francine, thank you for that market check. And bringing it back to the conference here, of course, here in Birmingham, battled UK Prime Minister Liz Truss is set to deliver her speech then at the Conservative Party conference later after a bruising first month as Premier. It comes as members of her own team openly push back against some of her fiscal plans. Let's talk to our own correspondent then, Lizzie Burden, who's been on the ground here at the conference in Birmingham since Sunday, talking to ministers, MPs, and of course officials surrounding the Prime Minister. Lizzie, what can we expect then from Liz Truss at this speech around 11 a.m. UK time?
Well, this is Liz Truss's moment to try and make a new first impression, to mark herself as someone different to Boris Johnson. It's a new era, and she's going to tell us that she doesn't mind being unpopular to get the job done. But it's a difficult message to deliver. I'm sure some eyebrows in the hall are going to be raised when, let's not forget, this started with a massive U-turn on the top rate of tax. And as you say, now there are massive divisions within the cabinet on what to do at the other end of the equality spectrum on benefits, because Truss has hinted that she would not commit to Boris Johnson's pledge to raise benefits in line with inflation, because she could use it to incentivise people into work, to save some money to pay for her tax cuts. But it's a difficult pill to swallow when we're in a cost of living crisis, and 38%, I think it is, of people on the main form of welfare are actually in work. And so I've been speaking to various cabinet ministers, Chris Philp, the Chief Secretary to the Treasury, Chloe Smith, the Work and Pension Secretary, the Justice Minister, Rachel McLean. None of them could really give a clear answer on what they would do with benefits. But Chloe Smith struck out to me because she said that what she really wants to do is protect the vulnerable. So a big gap between what she's saying, what Truss is saying. This risks not just divisions within the party, but also widening the gap with Labour, because they can't afford to be seen as only governing for the rich.
Yeah, with some poll leads pointing to a 33-point lead for the opposition Labour Party. Can you help clear up for us what is happening with these fiscal plans then from the Chancellor, Kwasi Kwarteng? They've been penciled in for November 23rd, with the OBR coming in with their own forecasts. Then there are reports that, in fact, it's going to be brought forward. What do we know? When are we going to be hearing about them from the Chancellor? Because that's what the markets care about.
It is, and it's been an absolute communications crash. It was meant to be November the 23rd. Then we heard that it was going to be brought earlier, so that one of the consequences would be that the Monetary Policy Committee could take account of the OBR forecast at its November Monetary Policy Decision meeting. But then Kwasi Kwarteng, in an interview with GB News yesterday afternoon, said that it's going to be November the 23rd after all, not throwing a bone to markets. And then in the evening last night, officials were saying, yes, he does want it to be brought forward, but he wants to announce it in the Commons officially after Parliament is brought back from recess that he's changing the date. So very, very confusing. And it's leading people here in the conference hall to question privately whether these are actually communications failures or whether it's actually a failure of policy and the people behind it.
Yeah, additionally, of course, that confusion, as you say, difficult for the markets to comprehend and get their heads around as we look ahead for more clarity from this leadership team. Lizzie Burden, thank you very much indeed, of course, on the ground here in Birmingham, looking ahead to that pivotal speech from the UK Prime Minister. Francine.
Yeah, so Tesco shares are trading higher after the British supermarket beat estimates. The company determined not to lose its reputation for value, despite food inflation soaring to its highest level in the UK since 2009. Well, Charles Allen from Bloomberg Intelligence is here. Charles, you always make us smarter on what supermarkets are doing or what they should do. So what do these results actually show?
Well, I think that they're showing what we thought Tesco would do, which is that they want to emphasize their sales and their value commitment for consumers. So we saw sales just ahead of estimates in 2Q, but equally we've seen the profit guidance trimmed for the year, down 2% probably only on their own guidance, but consensus probably has to fall a bit more than that.
So when you look at some of the things, Charles, what does it mean for margins, right? Because if they want to be competitive with the inflationary environment, how much of a nightmare is that?
Well, I mean, it's obviously difficult. I mean, realistically, on the cost of goods, all of the companies are going to have to raise their prices in line with what the suppliers are doing. However, there are other factors around. So we know there are energy costs. We know there are wage costs. Tesco is going to increase wages again in November. And there's a sort of marginal, when do you do it? And we now see that Tesco has got a commitment of 3 months not to raise just over 1,000 prices. That probably is going to just put a little bit of pressure on its margin.
Charles, what about the other supermarkets? I was shocked. So I often, especially when I'm running late and it's 3 p.m. and I haven't eaten, go to Pret a Manger and get a sandwich. It's always the same sandwich. It used to be $3.50. It went down to up to $4.25. Yesterday it was $5.65. I mean, this is like a huge UK problem.
Yeah, we know that prices are going up and we know that consumers are changing their behavior. They're buying a bit less. Yeah. They're trading down to own brands. They're trading down to discounters, and this is what the big fear for Tesco is, that it'll lose market share to Aldi and Lidl, which are helped by the fact that they have a smaller selection. It's easier to spend less money if there's less to buy.
Charles, thank you so much. Charles Allen there from Bloomberg Intelligence, looking at supermarkets and food inflation. Now, coming up are the signs of buyer's remorse all gone. Well, Musk goes back in for Twitter, potentially avoiding a contentious courtroom battle. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
The first priority here is organic growth. We clearly indicated also with our CapEx budget, 12 billion for the next 3 years, that we will keep investing into organic growth. We are very focused on our regular dividend payment. And then, if there is something left, which is fortunately the case at the moment, we will think about inorganic opportunities, and we will also think about other means to allow our shareholders to participate. That is why we are currently running a 2 billion euro share buyback program.
And you can catch Bloomberg Chief Future Officer featuring Deutsche Post DHL Group CFO Melanie Kreis tonight, 6:30 New York time, and tomorrow evening in Europe. Now, Twitter shares soared after Elon Musk revived his $44 billion deal for the social media company. The world's richest man intends to close the deal at the previously agreed price of $54.20 a share, potentially avoiding a contentious courtroom fight. Bloomberg had the story first, which was then confirmed by a letter Musk filed with the SEC. Joining us now then is Bloomberg Quick Take's Alex Webb. Alex, what happens now? What happens for Musk? What happens for Twitter? And how much egg on his face does he have at this point, the world's richest man?
Well, one kind of presumes that it might be an effort to avoid getting more egg on his face. It certainly looked as though he didn't stand a brilliant chance of winning the court case. That court case now presumably will not go ahead. That means he doesn't have to go up on the stand and go through further discovery where we learn more about his text messages and other communications that he had with some of his advisors. And then presumably the deal will then close sometime in the next year. Of course, it will have to go through the relevant regulatory process and get approval. But for investors in Twitter, they're presumably quite happy because they're getting a price that otherwise would have been hard to reach. For the employees of Twitter, it's a bit trickier. It's hard for them to know what their future looks like.
Alex, talk to us a little bit about what Musk wants to do with Twitter. So he's talking about the super app, a little bit like the WeChats in China. Is that really possible?
Yeah, so with Tom, I think earlier was showing us that WeChat is a world of possibilities. If you are in China, you can pay bills, you can order taxis, you can get on dating apps, you can play games, and much more besides. Whereas for us in Europe, the iPhone or an Android phone might be the portal to the web and, in fact, sometimes the real world. In Asia, it's often WeChat. Now, he has alluded to the idea that he wants to make Twitter a super app. Now, in theory, that's a great idea, and it sounds fantastic when you're talking to investors. The execution is a little bit harder, not least because you've got to convince developers to bring their products and services to your app. If you've got 200 million users compared to the billion or so iPhone users, that's a bit of a challenge. But more importantly is the regulatory consideration. In Europe, they do not like it when you use your leverage power in one market to generate power in a different market. Perhaps the caveat to that is that Twitter doesn't necessarily have a huge amount of power. Either way, there are a lot of moving pieces that it'd have to navigate in order to achieve that goal.
Alex, thank you so much. Alex Webb there from Bloomberg Quick Take. Now, let's talk about all of this with Manish Madhvani. He's co-founder and managing partner at GP Bullhound. Manish has executed M&A and capital raising transactions for some 25 years involving big names including Spotify, WPP, and News Corp. So, Manish, great to speak to you on the show today. Is it getting easier or harder to actually raise funds for technology companies?
I'd say it's definitely harder than last year, but I think you've got to take a step back and put it into context. Last year was record years by all accounts, and it's almost looking beyond that. How are we faring when you look back to 2019, 2018? And what you actually see is we're actually returning to those levels, and the good companies are raising. We just closed a round of 500 million for a European company, which was unheard of, but now is becoming quite common. But I'd say the bar has been raised considerably over the last 6 months.
Manish, it's interesting. Yeah, you're talking about the importance of looking at companies that are well run, and that funding continues to flow. I just think more broadly in terms of the environment that we're in of higher rates, recession concerns, of course, record inflation. I mean, just broadly across the sector, how much pain are you seeing? Are you seeing failures ticking up across this sector?
Yeah, I think there's kind of we hold this event, which obviously Bloomberg have participated in, called Investor All-Stars, which brings together all of the investors. So we have around 1,000 people coming from across Europe, all of the big funds to the seed funds. And you get a really good indication of the mood, the confidence, and what's happening across the whole ecosystem. And I'd say the experienced funds, in a lot of industries, people are shell-shocked at the moment and kind of looking at the short-term pain. And there's obviously some really difficult clouds on the horizon. I think within tech, though, the smart investors and the experienced investors are taking a long-term view. So is there fundamental demand for these companies? What's been happening on the consumer side? And if we take an extended view, what's the right strategy? And I'd say that's the confidence that I'm feeling at the moment. And you're seeing this with some of the rounds that are being announced. There's definitely a flight to quality. I think many of the companies with poorer unit economics, they're going to have to be creative. They're going to have to fold, or they're going to have to combine. We saw this in previous recessions, kind of in the food delivery market, which everyone's talking about. The unit economics only really work at massive scales. So the smart companies will then be consolidating and hitting that mass that will then allow them to survive.
So, Manish, how many companies are you actually expecting to go under? I don't know whether it's zombie companies or just companies that are nimble and adaptable. I mean, we're hearing, and again, these are very early reports, but it could be as much as 20% of the smaller companies that actually don't survive this business cycle.
Yeah, and I think that's probably right. I mean, if you look at the long,
it's a lot, man.
It's a lot, but if you look at the long-term stats, and I think this is one of the things that Europe has to embrace. In America, failure is kind of a strength. So when we look at the stats of all the European unicorns, or those companies that hit $1 billion, 70% of those founders have had 1 or 2 failures. They've then learned so much from that. So failure is, if the unit economics aren't working, if the business doesn't work, you've got to have the confidence and the guts as a founder to fold that or pivot, change the business model. And that's a necessary part of kind of the growing of this ecosystem.
Manish, you talked about the Investor All-Stars event, and I have to say it is refreshing to go and attend. I was there last year. The optimism is really refreshing, particularly in the current environment. What are you looking at in terms of the trends, the emerging trends? Where should investors be looking for opportunities, whether it's in healthcare or fintech? What is really kind of standing out to you at this point?
I'd say we're seeing a huge amount of innovation in digital health, and there's probably been too much funding in that area, but it's created this kind of bedrock of new apps, new startups that are getting access to so much more data than we've ever had in the past. And this is going to cause some breakthrough treatments, breakthrough people being able to look after their mental health, their physical health. And it's because you're able to take these tens of millions of data points now and see what affects you, what affects your training, what affects your sleep. And I think this is probably one of the most fundamental shifts we're going to see. Amazon have just recently bought into digital health, and they're going to obviously do what Amazon does, which is really try and improve their consumer service and take that to the next level. The other areas that we're spending a lot of time in are companies that monitor kind of CSR and ESG responsibilities, so making sure corporates are acting in an ethical and moral way. this has come back onto the agenda, but there's no real infrastructure that tracks that. Now there's this whole breed of startups and growth companies that are making companies accountable and can actually track if a company and all of its thousands of suppliers are behaving in an ethical way. EcoVadis is one of those companies that we're seeing is kind of changing that landscape. And then obviously security, cybersecurity is top of mind for everyone at the moment, given the political situation.
Yeah, I mean, cybersecurity seems like a total nightmare, and I don't know whether it's shifting, given you know the pressures that we're seeing in the world economy, whether mental health, a lot of sustainability things, people say they're interested and will do it, but actually companies stop investing in that because they worry about the cyber threats and kind of the economy collapsing.
Yeah, I think there is a danger of that, and there's a lot in the headlines at the moment that a lot of the health startups that received a lot of funding are not getting their second and third rounds. I think that's always true when there's such an influx, because that sector received kind of 3 or 4x the amount of funding it normally did in the last year. There will have to be some companies that are not going to succeed. But then you see that it kind of cycles through this IP, this talent. So in the last recession, the Facebooks, the FANG companies, acquired in 2 years 150 startups, and that brought in a huge amount of IP, lots of talent, and then they turned that into new products. So it's kind of this recycling and Darwin effect that will kick in.
Manish, we have the Spotifys, the Revoluts, the Klarnas here in Europe, some of them facing their own challenges. Where are we on the ability to scale to the levels that we see in San Francisco, more broadly across the US?
It's a good question. I think this is our next mission at GP Bullhound. We've kind of been on this real push to drive companies to this billion-dollar level. We're now achieving that on a regular basis in Europe. So there's 283 companies that have hit that mark as of May. What we're seeing now is there's kind of a bit of a ceiling for when we hit the $5 and $10 billion mark. So Spotify, Adyen have broken through, Revolut. But what we're seeing is to do that now, we really need to get the public markets working in Europe. So I'd say growth rounds used to be a missing part in Europe. That's fixed now. The good companies are easily able to raise kind of 200 to 500 million from the US, from Europe, from crossover funds. What we are seeing, though, in Europe is when our companies are going public onto the stock markets, they're not getting the liquidity, they're not getting the analyst coverage that you get in the US. And it reminds me of what was happening on the growth side in Europe kind of 5 years ago. We now need to fix that. We need to get the analysts educated. We need to get liquidity into the market. And there's quite a few initiatives that are being pushed to do this. And that's the only way we're going to start creating these companies of scale on a regular basis. I'd say the ambition levels from the entrepreneur and the skill set is there now, but we need the capital to kind of drive that, and that allows a lot of M&A.
Thank you so much for joining us, Manish. He is co-founder of GP Bullhound, Manish Madhvani. Now, we're also getting a bit of data out of France. September services PMI coming in pretty much as expected, 52.9. Anything above 50 indicates expansion. The preliminary was at 53. Now, coming up, the Fed might not pivot, but Elon Musk seems to have U-turned on Twitter. We'll discuss the key themes of the trading day next. And this is Bloomberg.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to the Open. We are 54 minutes into your European trading day. Losses of 0.2% across the benchmark. Let's take a look then at how the markets are moving in the first hour in more detail and bring in Bloomberg's Jan Patrick Barnett. JP, the enthusiasm, the bets that the Fed was going to pivot, they always seemed premature, didn't they? How is it shaping up?
Yes, obviously a little bit setback today, but that's normal, I would say, like after a two-day monster move that we have seen this week. So everybody's settling in a little bit and have a rethink. As I said before, like the reason why we were up was a little bit like silly, so to say, with like just one data point. We have 7 Fed speakers coming up until the week ends, and we have more labor data coming tomorrow and on Friday from the US. So those data points and those speeches will be highly observed, and then we will see what the market is making out of it.
So, JP, with a lot of focus, of course, is on the Musk Twitter deal. How risky is it in this market?
Well, this story is just like amazing. Yes, I do it. Yes, I don't. Yes, I do. Sue me not. I buy it. Well, now he says he buys it. I think it's super risky. Financing conditions are not the best at the moment. This is a huge deal. He has to probably sell a lot of Tesla shares to fund it and then cooperate with the banks. It won't be cheap for him, I guess. So we will see. I'm not sure if we have seen the last tale of tales here in this story.
All right, JP, thanks so much. Jan Patrick Barnett there with the very latest on the markets. Now, that's it for the European Market Open. Surveillance Early Edition is up next. We have some exclusive coverage. We go back, of course, to Tom in Birmingham to look at the Liz Truss speech to try and reset her premiership. And then we look at all of these market moves. The focus firmly on some data points out of the U.S. We also look at the Musk deal. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding, and the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology.
Welcome to Bloomberg, the lineup.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Twitter troll Elon Musk revives his $44 billion offer for Twitter just days before a contentious courtroom fight is set to begin. Slashing production, OPEC may agree its biggest output cut since the start of the pandemic. U.S. futures dip after stocks staged their biggest two-day rally in more than 2 years. Plus, on the ropes, embattled Liz Truss is set to deliver her keynote speech, hoping to reboot her premiership. We're live at the Tory conference in Birmingham. But first thing is first. Let's check the markets. And of course, the markets tell us a different story. The equity rally that we saw yesterday sputtering. A lot of the talk about the Fed pivoting to be a bit cooler in how they deal with inflation has not happened. We're also getting some data points out of Europe. Euro area September services PMI, 48.8. The preliminary was 48.9. Now, the picture overall across the board, and you can see U.S. indices, futures, and European stocks falling. Investors really taking a pause from a rally that was driven by bets by these less hawkish central banks. We're seeking more evidence that inflation is moderating. For the moment, we're not getting that. There's also a growing cohort of money managers cautioning against that expectations for a so-called Fed pivot. That, they say, is being overdone, and they risk ignoring the economic pain that would underpin such a dovish tilt should policymakers adopt it. So one by one, short sellers are being forced to stand down as market expectations grow for a slower pace of central bank tightening. This led to the best two-day run for the S&P 500 since March 2020 and the strongest session for European stocks in 6 months. Now, equities opening on the back foot today. We're joined by Daniel McCormack. He's head of thought leadership at Macquarie Asset Management, and Bloomberg's Christina Aquinos. Thank you both for joining us. I just love your title. That's the title I want when I grow up. The concern right now is that there's very different black swan events that could come to the forefront to create the perfect storm. Are you much more worried about the global economy now than you were just a month ago?
Sure. I mean, I think things have deteriorated reasonably markedly over the last 6 months or so. And I think as we go into the back end of this year, we're going to continue to see growth slow, not only in Europe and the UK, but also in the US. And recession risks for 2023 are undoubtedly very high.
Yeah, so when you listen to that, Christiane, you look at some of the market movements, how does the Fed handle it? We talked about this Fed pivot, but actually they just want to break inflation.
Absolutely, Francine. And I think I would expect to see more pushback from the Fed to the idea that a pivot is coming and a peak in rates is coming imminently. I mean, that's something that markets kind of got really excited about over the last couple of days. But this is the issue with any narrative that declares the peak of anything, right? Because it only takes a few data points, for instance, that support the Fed's tightening policy to really kind of turn that narrative around. And that's potentially what we could see with the labor market data coming this Friday. And again, I think the key here is really a trend rather than a few data points in time, and we're not there yet.
Yeah, so we're not there yet. What does it take for actually us to be there, and what are the pitfalls for investors until then?
Yeah, I think that the Fed will be looking at two indicators in the main. So inflation, they'll want to see consistent falls in actual inflation, but also the labour market. I mean, we saw the sharp fall in job openings earlier this week. There'll be, all eyes will be on non-farm payrolls at the end of the week. But if non-farm payrolls cracks, if we were to see a negative number, I think sentiment would continue to move towards focusing on a Fed pivot.
Daniel, I feel like there's so much belief or so much longing in the market for the Fed to be a bit cooler that they're not understanding the underlying message of what we're told, frankly, by Federal Reserve presidents day in, day out.
Yeah, I mean, the Fed is very sensitive to incoming economic data. It always has been. So while I recognise that markets have probably been a little bit too early on the pivot idea for a while now, it wouldn't surprise me, particularly if the data start to turn, that the Fed does start to talk about rates peaking out. I don't think they're going to be cutting, right? So it depends what we mean by pivot. I don't think cuts are coming, but a pause could well be coming.
This is one of the charts of the week, if not the month or the year, and it's looking at some of the liquidity drying up, especially in the bond space. This is thanks to Valerie Untitled that was also talking about it, I think, on air today. What does that tell you about some of the risks in the markets?
Sorry,
the bond liquidity actually drying up. Do you worry about liquidity impacting these markets adversely?
Yeah, absolutely. And we've kind of seen a little bit of that, with the moves in UK bond markets recently. And I think this is really a warning to governments, across the world that, if the UK can experience these kind of market difficulties, we've got to be very careful about government finances and their sustainability.
All right, let's talk also about oil. OPEC Plus set to discuss an output cut of as much as 2 million barrels per day when the cartel meets in the coming hours. Let's head to Vienna, where Bloomberg's Manus Krania is standing by. Manus, OPEC Plus gathering in Vienna, the first in-person meeting in 2.5 years. Why such a hurried gathering?
Well, we've gone from 5-minute rubber stamping online Zoom meetings to something much more significant. Take your mind back, August 22nd, His Royal Highness Prince Abdulaziz bin Salman told the world, told the market, you've got it wrong. There's a disconnect. It's broken between what's going on in the futures market and the reality of what we can produce. It's broken. It's splintered. Oil prices fell. This is going, as Bob McNally said to me, from a broadside, from a warning shot to a broadside. We're setting the table here for a monster cut of 2 million barrels a day. Now, how much impact will that really have? Probably about 900,000 barrels a day off the market, Francine, but OPEC Plus is already under producing from the baselines by about 3 million barrels. Not a math there, but the bottom line is this: it's about recontrolling the market, recontrolling the narrative, and warning. In September 2020, His Royal Highness warned the market and speculators, I'm going to have you guys and girls ouching like hell if you try to speculate against this market. So I think this is about the Central Bank of Oil redefining the narrative and recasting the forward guidance with definitive action from all members of OPEC Plus. Francine.
But Manus, so two things, right? 2 million barrels per day is huge. So they either announce 2 million because some of the countries cheat and so they get less, or they want to cut 2 million for real because they see something that we haven't seen yet, which is the economy is really, really bad.
Absolutely, and I think that's what has galvanized this in-person meeting. It was announced very quickly. I was here 6 weeks ago with Secretary General Haytham El-Ghais as he sat into the seat. He warned that, the margins of production within OPEC Plus were razor thin. But the issue is manyfold. The Russians are here. Novak is on the ground. They're going to push hard for a big cut because it galvanizes their position. But of course, the geopolitics of the White House really, really matter. Biden went and fist bumped Prince Abdulaziz bin Salman's brother. But of course, there's a sense of angst in the White House. Let's listen to Bob McNally.
They are in full panic mode. Democrats have thought they got a reprieve when oil prices fell. They're facing very difficult elections in November. That oil price drop has been a blessing. The last thing in the world they want or need is anything that causes prices to start marching upward again.
The Americans went to Saudi Arabia. They fist bumped the prince, and he added some oil. Here we are, 2 months later. Whoosh, whoosh. This is cutting. This is going so much against what was sort of geopolitically accepted, a rapprochement between the Biden administration and the House of Saud. So they're anxious in Washington. That could mean export bans. It could mean no OPEC. And that word strikes real angst in the House of OPEC.
I know, Manus, I mean, to be polite, this is going to irk the U.S., and that's really us being polite. Manus Cram, some great reporting out there on the ground. I know he also has a slew of exclusive interviews coming up. Manus, I know you'll get the ministers, so we're counting on you as ever. We're also getting another piece of news from Saudi wealth fund starting marketing a three-part dollar green bond. We'll talk about that as there's more and more pressure to stop relying on oil-producing companies and countries to go into green. So it's a bit of a controversial thing that we'll get back to. We're back with Daniel and Christine as well to talk about oil. Christine, again, the problem is that if OPEC Plus does this huge move, right, and cuts by so much, the U.S. are not going to be happy, and you have to wonder whether they're worried about a slowdown in the U.S. or whether it's China. Like, where are OPEC worrying about that economists should be worrying about more?
Yeah, it's quite an interesting question, Francine, and I do agree. What is it that OPEC Plus is seeing that we just aren't at this point in time? You're absolutely right that it could be more bad news out of China. I mean, we are getting some indication perhaps that oil demand in China is set to rebound in the fourth quarter, but there's really not been a lot of visibility in terms of the real state of the economy over there. We know that they're still reeling from the aftermath or the continued impacts of the lockdowns there, and really has not been up to full speed at all this year. China remains really the wild card for markets. As far as the U.S. goes, obviously, again, higher oil prices really not going to be great for them. Not going to be great for them politically, also not going to be great for them in terms of monetary policy, because the whole point of this Fed tightening exercise is to curb inflation, and higher oil prices directly go against that.
Yeah, so what do you do? I mean, it just seems like, once again, it's a perfect storm, and I don't know whether it's geopolitics in there or how you advise your traders to work through this.
Yeah, I mean, I think it's a difficult environment. There's no doubt about it, Francine. So I think, the outlook for equity markets is challenged. I think the next shoe to drop is earnings. They could easily be caught in a pincer movement of slowing top-line demand, but also increasing costs. So equity markets could continue to be under pressure. Bond markets, they may not continue to sell off as they are, but I also don't think we're going to see a rally. So look, we like alternatives, right? I mean, we like infrastructure, and in the current environment, I think you sort of want three things. You want yield, you want inflation protection, and you want defensiveness. And as you go down that checklist, things like infrastructure offer you that. So we really like that space.
Yeah, and you've always actually liked that space, right? At Macquarie, is there a danger though that inflation means that you erode some of that yield?
I mean, inflation is bad for all asset classes, right? It's bad for returns, absolute returns for all asset classes. But within that weaker absolute return picture, infrastructure has a really good inflation hedge. So it actually can be a relatively good performer in a more challenged overall environment.
Wonderful. Thank you so much, Daniel McCormack, there, Head of Thought Leadership at Macquarie Asset Management, and Bloomberg's Christine Aquino. Now, we'll have plenty more, of course, on the markets on inflation. Coming up, Liz Truss will have a chance to get her UK premiership back on track, or will she? Later, when she delivers her keynote speech of the Conservative Party conference. More on that next. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure,
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. No one covers the world like Bloomberg.
The pressure cooker just got far too hot in Birmingham for the government to handle.
You foresee 2/3 of the crypto hedge funds will disappear. Are we close?
The European Union will support and defend Ukraine's territorial integrity.
With unmatched reach and resources from more than 120 countries. The moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, embattled UK Prime Minister Liz Truss is set to deliver one of her most important speeches later today when she addresses party members at the Conservative Party conference in Birmingham. Well, for a look ahead to that speech, we're bringing in Lizzie Burden in Birmingham. We're also joined by Karen Villamoria, a member of the House of Lords and chairman of Cobra Beer. Thank you both for joining us. Lord Villamoria, give me a sense of what businesses need right now. The concern is that a U-turn means it's policy uncertain. Whether you believe the policy is the right thing or not, are businesses going to be more reluctant to invest in the UK?
The one word we've got used to more than any other word since the Brexit vote in 2016, right the way through the pandemic, right the way now through the sad war in Ukraine, and now inflation and energy crisis, is uncertainty. And business hates uncertainty. At the moment, we've had a Conservative Prime Minister and Chancellor who've taken office saying that they want to promote growth. And that is fantastic because that is just what business needs. I mean, we've had, since the financial crisis, flatlining of growth, flatlining of productivity, low interest rates. We know that at some stage we've got to grow. We've got the highest tax burden in this country, in the United Kingdom, in 70 years. How can you recover from a pandemic when you have high taxes that hamper the recovery and hamper growth? So their policies in terms of encouraging investment, encouraging growth, having a target growth rate of 2.5%, which is what it used to be before the financial crisis 13 years ago, that is spot on. But they've made some fundamental mistakes.
Right. Can they recoup some of those mistakes? What's the way forward for the Prime Minister today?
If you take the mistakes one by one, the 45% tax, to announce that at this stage, was wrong. 40% is where tax should be. We all agree with that. It's where it was before. It was there with Margaret Thatcher, with Tony Blair, with John Major, with Gordon Brown. It's only been 45% since 2010. It needs to go back to 40, but now's not the time when people are suffering. Bankers' bonuses to remove the cap, absolutely right. But is this the time to announce a policy like that? So they've gone back on the 45%, which has really upset their credibility. But then you look at the other issues, the OBR, the Office of Budget Responsibility, to put out such a major announcement, what they call a mini budget, was actually a major budget, without the backing of an OBR report. I think that was rushing into it. And now we've been told the OBR report, which they've said is going to happen on the 23rd of November, was going to be brought forward to this month. But I've heard that may not be happening anymore. The sooner that OBR report happens, the quicker. And then the most important thing that nobody is talking about is that this government spent £400 billion saving the economy and businesses and jobs during the pandemic. It needs to carry on helping business. Small and medium-sized enterprises in this country will not be able to survive this winter in spite of the help that's been given with energy, which will reduce their bills by about 40%. Consumers have got an energy cap of £2,500 on average, but businesses are still really suffering with inflation in all areas, in input costs, food prices. They will need help. They'll need help with cash flow. That's not been announced before, and that will be needed.
So, Lord Bilimoria, I was at the Labour conference last week, and it was a very different atmosphere in Liverpool, much more united, disciplined, but they're making a big pitch for business as well. Of course, the Tories are offering to cut corporation tax. You mentioned the lift on the bankers' bonus cap. Who now is the party of business?
Well, the Conservatives in this country have always been the party of business. But if you look back at history, Tony Blair's government was very business-friendly. The tax rates that we had then, the entrepreneurs' relief, the capital gains tax rates, those were all very business-friendly. And this Labour government under Keir Starmer and Rachel Reeves, the Shadow Chancellor, is very, very business-friendly. They have been reaching out to organisations like the Confederation of British Industry, who we work closely with the government. We always work closely with the opposition as well. And I've been able to see at first hand that this Labour government is trying to be very business-friendly, trying to be more like the Labour government under Tony Blair, which business would be very comfortable with, but not if taxes go up. And one of the reasons Boris Johnson won his 80-seat majority that everyone keeps talking about is he was up against Jeremy Corbyn. Business was terrified of having Jeremy Corbyn as Prime Minister and tax rates going up and business being stifled.
So, Lord Bilimoria, if you had to decide today who's more business-friendly, given the U-turns and some of what was, in the policy proposals, which party is more business-friendly today in 2022?
What Liz Truss and Kwasi Kwarteng are trying to do is spot on. It's not just what you do, but how you do it. And unfortunately, the way they've gone about it with the best of intentions at the moment has not worked and has spooked the markets. And they need to get confidence back. We want confidence more than anything else. If they can deliver this growth plan, if they can incentivize investment, if we can have 100% capital write-off for investment by businesses, that's what we need. We need R&D and innovation. We need to improve our skills. We need to continue on the journey of net zero. We've got small modular nuclear reactors that this country, like Rolls-Royce, can build within 5 years. We haven't started building them. That's what we've got to do. And the government's got to start acting quickly, and business will get right behind it.
All right, thank you so much, always, of course, for your insight, unique insight into perspective, because you're also the founder of Cobra Beer, so you've had to build this. Lord Bilimoria, they're a member of the UK House of Lords, Vice President of the CBI, and our Lizzie Burden in Birmingham. Now, for everything on the UK and London, also make sure to check out our new podcast. It's Bloomberg in the City. We have a couple of special bonus episodes that were also played out this week. Coming up are the signs of buyer's remorse all gone. Musk goes back in for Twitter, potentially avoiding a contentious courtroom battle. This is Bloomberg.
They're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
We will never break. We will never break. Build on a foundation strong enough to stay. We will never.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg. First with news, here is Leanne Gerrans. Hi, Leanne.
Hi, Francine. Gazprom says transportation of natural gas to Italy via Austria is resuming. The Russian gas giant says it has reached a solution with Italian buyers amid changes in Austria that had halted flows to Italy. Meanwhile, Bloomberg has learned the UK is on the cusp of securing a natural gas contract with Norway for as long as 20 years in a bid to stave off the risk of winter blackouts. A deal is expected to be agreed next week, though negotiations on price, volumes and the length of the contract are continuing. Now, EU countries are said to have agreed a new package of Russian sanctions that includes a price cap on oil sales to third countries, with a formal deal expected later today. Bloomberg understands a compromise has been reached to protect countries with big shipping industries. That's after Greece, Cyprus and Malta raised concerns about curbs on transporting oil from Russia. Now, Ray Dalio has given up control of Bridgewater Associates, the firm he built into the world's largest hedge fund. The billionaire co-founder transferred all of his voting rights to the board of directors and stepped down as one of Bridgewater's co-CIOs at the end of September. The move marks the end of a succession process which did start back in 2010. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Leanne, thanks so much. Coming up, bond giant PIMCO thinks it's now time to start buying debt. Is it? We'll have more on that next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Today's CFOs are reshaping the C-suite, breaking out of traditional roles to become Chief Future Officer. Global logistics is complex. It takes plenty of capital and plenty of focus. Deutsche Post DHL Group CFO Melanie Kreis makes sure her company has both.
My role is essentially saying what is working well in this company, where do we have challenges, and what should we do going forward.
Chief Future Officer, Wednesday on Bloomberg. Brought to you by Workday.
Troll Elon Musk revives his $44 billion offer for Twitter just days before a contentious courtroom fight is set to begin. Slashing production, OPEC may agree its biggest output cut since the start of the pandemic. U.S. futures dip after stocks staged their biggest two-day rally in more than 2 years. Plus, on the ropes, embattled Liz Truss is set to deliver her keynote speech, hoping to reboot her premiership. We're live at the Tory conference in Birmingham. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're just getting some breaking news out of the European Union. The EU is backing Russia sanctions package, including an oil price cap. Now, this is something that we had concerns that would have splintered apart Europe because, of course, not every country is on board. But for the moment, it seems like they've managed to resolve their differences, and the EU is backing this Russia sanctions package, including a cap on the oil price. Now, bond giant PIMCO thinks it's now time to start buying debt. The fixed income specialist expects high-quality bonds to start delivering returns much more consistent with long-term averages. We're joined now by Andrew Balls, Chief Investment Officer of Global Fixed Income at PIMCO. Andrew, thank you so much for joining us. First of all, I don't know how you lived, last week in the UK, but we have this brilliant editorial article saying, like, look, UK pension funds really should not be this exciting. Like, when you look at the swings that we've seen, what does it mean for other futures wanting, other governments trying to do the same?
Yeah, so when you have this kind of financial market volatility, you look for where the leverage is, and clearly there is leverage in terms of these levered bond positions in the pension industry. So you have this excitement, or whatever it was, the term you used. And I think that if you're running those kinds of schemes, you would be looking at the leverage and looking to probably reduce some of that, just own these long-dated gilts to match the liabilities outright. So that is, I think that's probably what we would expect given the recent experience.
Yeah, I mean, pension funds really are supposed to be amongst the least exciting financial institutions. Will we go back to that in the UK? Well, I mean, so we had remarkable volatility in terms of UK fixed income markets, the currency as well, of course, and again, where there's leverage, that's where you tend to have the problems, the margin calls during this environment. Things have settled down, considerably. The level of yields have come down significantly. Broadly, the pension industry, the health of the pension industry in terms of funding is quite good across the board. And so I think if you're involved in with these schemes, I'm sure there is a discussion going on the amount of leverage and liquidity. And as investment managers, that's the job for PIMCO, for anyone involved in investment management. Managing your liquidity is one of the most important parts of the
the job to avoid finding yourself in the situation of the sorts of troubles we had last week for the some of these pension funds.
And Andrew, I know that you believe there's a bright spot, certainly in your job, which is with yields now higher, bonds are attractive again. But how much volatility and seesawing could we see?
So I'd make a distinction between two things. So in terms of the outlook for the next 6-12 months, the longer term outlook, yes, the yield on bond funds, core bond funds, looks really quite attractive now. Add some more credit, slightly riskier funds. Again, you're looking at very interesting return potential over the next coming years. So I think the medium-term outlook is quite positive. And we, in terms of our asset allocation strategies, we have some concerns on equity valuations going into recessions across countries, given earnings projections, given valuation. But the return for bonds here looks quite positive. This is on the back of, we should acknowledge, really difficult year across asset classes for fixed income, for equities. But now you're seeing, 5-6% type yields for US dollar core bond funds, higher when you have more credits in the portfolios. This is quite attractive. But contrast that with the short term, which is difficult at a time of high inflation, recession, and this very significant central bank tightening cycle. So tactically, this is a difficult time. But I think the medium-term picture is pretty good.
So what exactly would you be buying right now? And Andrew, there does seem to be a reluctance for the markets to reprice, what the Fed is telling us, which is they'll fight inflation even if it means starting a recession.
So I think that's right. I think the central banks are committed to fighting inflation. They need to be, given where inflation is. So it's interesting that market pricing is now a bit below the Fed's own projections. And so I still think there's a lot further to go in the Fed cycle and in global central bank cycles. So don't fight the Fed. I think their projections look pretty reasonable. But then if you go to further out the curve, the 10-year part of the curve across global markets, I think the yields now look pretty attractive, and this is what is giving you this 5.5% type yield for global bonds, US bonds, core bond funds. So that's the 10-year part of the curve where the levels have repriced to what look like very reasonable levels now to us.
Yeah, Andrew, do you buy gilts?
So we tend to be neutral, a little bit underweight on gilts. For a long time, we have thought that gilt yields were too low and they should broadly trade in line with where the US market trades. Then that suddenly happened a lot quicker than we would have anticipated in the last week or two. These levels, I think it's broadly neutral. PIMCO portfolios, we tend to be broadly neutral, a little bit underweight, but it looks broadly fair now versus the US, I think, in my view.
Do you buy any bonds in Europe? I don't know whether it's BTPs or others. There's an election in Italy, and a lot has been said. Look, Italy will be looking, the new government will be looking at the UK and say, well, we're not going to do that.
So broadly, after a period of very low bond yields in Europe, it now again looks pretty reasonable across the board, and the ECB clearly moving higher. So we've escaped this period of negative bond yields, we would think, in Europe, and that should be quite robust, even amid a very difficult recessionary environment in Europe. Italy has repriced this year, partly just because it's a high beta market when credit has been selling off. Partly, I think you need to have concerns about the new government and over time just how this is going to work out. We tend to be a little bit underweight in Italy, but you're getting attractive yields versus Bund. So I think you're broadly compensated for the risk, but clearly a lot of uncertainty with this new government. Not the sort of government that we've seen in Italy for a long time.
Wonderful. Thank you so much. Andrew Balzer, Chief Investment Officer for Global Fixed Income at PIMCO. Now, coming up, Elon Musk seems to have U-turned on Twitter. We'll get the details next. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, of the US, Europe and the UK, have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Twitter shares soared after Elon Musk revived his $44 billion deal for the social media company. The world's richest man intends to close the deal at the previously agreed price of $54.20 a share, potentially avoiding a contentious courtroom fight. Now, Bloomberg had the story first. It's our scoop, which was then confirmed by a letter Musk filed with the SEC. Well, joining us now is Bloomberg Quick Takes Alex Webb, who looks, of course, at all technology stories. So, Alex, first of all, why is he now back in?
Well, we don't fully know his own thought process, but if you look at some of the external factors, you can probably infer that it was looking like he didn't have a great chance of winning this case. There had been a number of hearings in the run-up to it, of which he had lost all of them. There were about half a dozen to do with pushing the case back to February, for instance. Twitter won on that one. Twitter trying to seek more information about his communications with his financiers. Twitter won that one. And so if it looked like he was going to lose the case, but then he would still have to get up on the stand, have more information come out in discovery, perhaps he goes, well, what's the upside to this? I might as well just stomach it and pay it anyway.
And at the same time, so he alluded to trying to turn Twitter into the super app, a little bit like what the Chinese have in WeChat. Can he really do that?
So yeah, it's a hugely appealing prospect if you're an investor, particularly if he's having to convince his debt investors that this is a wise thing to do, that you can maybe generate more growth by turning Twitter into something like WeChat, where you can access cinema tickets, taxis, pay your bills, dating apps, games, plenty more besides, through Twitter. The challenge is twofold. You need to have enough users to convince developers and companies that it's worth investing in that platform and doing lots of things for it to make it a super app. But there aren't as many users on Twitter as there are on Facebook or on YouTube or on TikTok. If you were big enough to force them to do that and encourage them, they should be doing it, then you start to get into some antitrust problems, because regulators, particularly here in Europe, don't particularly like it if you leverage strength in one field to generate strength in another one. That's why Google has had to pay billions of dollars in fines. There's a slightly perhaps intractable problem in the middle of that might make it hard to crack.
Alex, thank you so much. Alex Webb there from Bloomberg. Quick take. Now, my next guest is no stranger to investing in tech firms. He's put money into some of Europe's biggest, such as Klarna, the Swedish fintech company. Its multi-billion-dollar valuation has, like many growth firms, fallen, though, during the sell-off this year. Well, Matthias Lundman is the founder and managing partner at Moonfire Ventures. Previously, he was at Atomico. Matthias, thank you so much, as always, for joining us. So, when you invest, some things go well, some things don't go so well. This is a very peculiar environment. Inflation's up, economic, certainly ideas in the UK are being tested. What does it mean for your appetite for UK assets?
Yeah, no, it's really an insane period, right? And it's a total mess. And we're used to volatility, right? And we're also used to uncertainty, but we're really getting into uncharted territory. But in these times too, there are great companies that do get created. And for us, we are still spending, investing, and looking for the next sort of company to that will change sort of the different sectors that they're challenging.
And that would be where, Matthias? Are you looking at geographically? I don't know whether this kind of inflationary environment means that you can get into good companies at a cheap price, or whether you're worried about some of these companies going bust.
Yeah, so look, we've spoken to our founders early on. We spoke to them already in February and said, look, you need to be careful about your finances. You need to make sure that you're spending your money well, becoming a lot more efficient. And they have done that. And many of them actually, in our portfolio, over the last 5 months, we've had 8 up rounds. So they have taken on that advice. We've also been lucky. We've been very disciplined in a very difficult market in 2021. Sorry, in what now looked like an expensive market in 2021, and today is becoming a more difficult market. So that has allowed us to sort of reap the benefits of having those up rounds and allowing our companies to have strong cash positions and continue to grow.
Matthias, is there anything that looks appealing right now? So is there something specific? I don't know whether it's fintech. I know, Klarna, there are issues about the model, but there's this, is there a specific segment of the market that you think will do especially well in the coming years?
Well, I think what's really interesting is to look at today compared to, let's say, the recession that we were sort of facing in 2008. In 2008 turned out to be an incredible period to start a business. There was the advent of mobile. We then had cloud computing. It then created that sort of voracious sort of growth that was super interesting and created an expansion of our tech ecosystem. So what is happening now? And I think that AI and machine learning is really at a unique point, an inflection point, really, because, it's going from being a sort of a research project to real technology. And that technology is being deployed across industry and across different sectors. So today, you can code a lot faster through sort of Copilot and GitHub. You can create images and content and text and so on. And it's basically accessible to anybody. You just need that plugin. You do need to log into a website. So it's becoming a lot more mass market than ever before.
But so do you invest in the technology? Do you need technology to make sure that it works? Or is it at the other end?
Well, this is what I think. I think actually we've moved it from being a sort of a research project to really an underlying technology now is driving further growth of lots of different companies. So when we're looking at different businesses, I can give an example. One of them, for example, is LiveFlow. They're producing live financials. So kind of being your digital CFO for any SMB. So they're creating this information, allowing people to have their financials at their fingertips. And this is these are the types of services that we're going to see expand, utilizing sort of AI and machine learning to allow them to deliver these types of services.
Matthias, when you look at a longer-term opportunity, and how are you expecting the tech sector to change? So I don't know whether Elon Musk can pull it off and have this super app that's very similar to WeChat, and so what that means for spin-offs and the whole ecosystem.
Yeah, so it's really interesting in terms of what he is trying to build. I mean, he's looking at what has been so successful in China and now thinking, okay, can we produce something here in the West? It has been tried, has been tested, it has not worked, but it doesn't mean it can't work. And so Twitter, in terms of being a sort of turning it into a super app where have lots of sort of sub apps within it, you know, is a really exciting prospect because it means that they reduce their dependency on things like advertising revenue and can produce sort of other kind of subscription type revenue or transaction revenue, which would be a lot more valuable for a company like Twitter. So I think that's sort of some of the interesting things that are happening in our market. But I would be also just as interested in looking at the long term in terms of what crypto is going to be able to give to us, or Web 3.0 is going to give to us. It has not become mass market yet. It's still super early days. But just like these other transformative technologies, it's just a matter of time before it's going to reshape the way we do business and the way we live and work.
Yeah, I was going to ask you about Kim Kardashian, which I have to say, Matthias, is actually a first on this show. You know, Kim Kardashian and what happened with cryptocurrency. Are you expecting crypto to change significantly in the next 2 to 3 years? And what does it mean for early stage investments?
Yeah, so I think one has to divide between the sort of tokens and the token trading, and then the underlying apps that are actually used by individuals. You know, those apps today, those sort of what they call dApps, are actually not, you know, they're definitely not mass market at all. And what we're excited about is, you know, investing and looking at the next generation gaming companies, because we believe that they're going to be the first businesses to really explode in this market. Why? Because what we have seen in the Web 2.0, you know, they can replicate into the Web 3.0, but really make it materially different and more interesting. So the behavior is the same, but you're actually creating a lot more deeper and stronger incentives and basically engagement and immersion from those users.
Matthias, thank you so much, as always, for joining us. Matthias Longman, there, a founder and managing partner at Moonfire Ventures, for a smart conversation on tech and early stage investments. Now, coming up after a rocky start to her premiership, the UK Prime Minister Liz Truss addresses a Conservative Party conference today. We're live in Birmingham next. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacroix here in London. Now we're just getting some breaking news out of the EU backing sanctions against Russia. This is a whole package including a price cap on oil, but also including steel products, machinery, and paper. These EU sanctions include a ban on IT engineering and legal services. This is, of course, wanting the EU to be as a united front. I'm not sure the huge impact that they think it will have is playing out in the markets right now. Now, the embattled UK Prime Minister Liz Truss is set to deliver one of her most important speeches later today when she addresses party members at the Conservative conference in Birmingham. This comes with top members of her team in open disagreement about her fiscal plans. Our Tom McKenzie is at the conference now. So just how significant, Tom, is this speech?
Francine, it may be a stretch to say this is make or break for the UK Prime Minister Liz Truss, but it is absolutely pivotal. In a press release that her team sent out late last night, we got some details around what we expect to hear from the Prime Minister. She's going to be talking about her desire to build a new Britain for a new era. That is a term that she's coined, talking about wanting to get away from a low-growth, high-tax economy, and again pledging what she would describe as her iron grip on financial and fiscal responsibility. But of course, the challenges are enormous. First of all, she has to regain credibility with the people of Britain, and we've seen the polling pointing to a lead in some examples of at least 30 points for the opposition Labour Party. Then, of course, she has to reassure her own cabinet, and that is almost unprecedented, the divisions that we're seeing with her own cabinet for a UK Prime Minister who's only been in power for a little under 1 month. We're seeing those divisions being aired at this party conference. And then, of course, she has to reassure and rebuild credibility with the markets. And we know there is a lot of work to do on that front. So the heavy lifting from Prime Minister Liz Truss is enormous. We know that she has an agenda around cutting taxes and cutting regulation. She wants to deregulate this economy. But of course, in terms of implementing those policies, she's going to first of all have to get her cabinet on board, and then, of course, the broader party. The challenges remain, and of course, there may be further U-turns in the weeks and months ahead after, of course, the drama of walking back from that higher tax rate.
But there's so much damage that's already been done, Tom, and we talk now about major rifts in her cabinet. How does she overcome that?
Well, for the moment, it doesn't look like she is going to repair those rifts. She'll be hoping that this almost 30-minute speech she's going to be giving around 11 a.m. will go some way towards that. But the communications and the lack of clarity from her team and officials around her continues. We heard from the Chancellor at one point, at least reports that Chancellor of the Exchequer would be bringing forward their fiscal plans. Along with the OBR analysis. Then we heard it wasn't going to be, and it was going to be announced on November the 23rd. Then we heard again last night that, in fact, it was going to be brought forward. So that is another example of the kind of communication disconnect that we're seeing here. And again, the open divisions around, for example, raising welfare benefits in line with inflation. That debate continues within the cabinet.
Tom, thank you so much. Tom McKenzie in Birmingham. We'll have plenty more, of course, throughout the day. Matt Miller, K-Lines in New York, Anna Edwards here in London, and this is Bloomberg. What do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that You know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view. And I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Let's put it this way, we are not where we were in 2007, 2008.
There's a global shift towards a higher returns environment, but you can't get there all in one go.
Rule 101, and I kind of broke that, is don't chase flash crashes.
The question of the day has been, you know, where we are in terms of capitulation.
I'm comfortable enough saying we're building a bottom, so I'm fully invested.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Elon Musk's U-turn. He revives his $44 billion buyout bid for Twitter in what may be an attempt to avoid a trial. It would be the biggest production cut since 2020 for the oil cartel. OPEC and its allies are weighing whether to reduce output by as much as 2 million barrels a day. We'll be live in Vienna. And problems keep mounting for Credit Suisse. One of the bank's units that lends out shares had to reverse some transactions after clients got spooked by its financial health. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Well, we got excited and more excited about the potential of a Fed pivot, and then we kind of came back down to earth, Kaylee, it seems.
Yeah, you're definitely seeing a bit of coming down to earth in Western markets, but all that excitement was still seeing follow through in the Asian session overnight, specifically in Hong Kong as it reopened from a holiday break yesterday. The Hang Seng Index as a whole up about 5.9%, nearly 6 full percentage points as we play a little bit of catch up to what we've seen in the U.S. over the last 2 days, and that was really a move led by technology. The tech index up 7.5%. Of course, those tech stocks have been benefiting from lower yields. That may be changing in the U.S., but it definitely was still the story in Asia overnight, where we saw the 2-year yield in New Zealand moving down 18 basis points to around the 389 level, even though the RBNZ hiked 50 basis points for the 5th time in a row and signaled that more hikes are indeed coming. So still a hawkish tone out of the New Zealand Central Bank, very different than what we saw in Australia yesterday with just a 25 basis point hike. And that is lending some support to the Kiwi, really one of the only G10 currencies that is still holding onto some strength against the US dollar today, just up by about 1/10%. The Kiwi right now trading around 57 cents, Matt.
Yeah, the dollar gaining some real strength. We did have a really incredible rally, about 5% in the last 2 sessions. We added almost 200 points to the S&P 500. We got to 3790. Futures are down right now about 0.75%. They've been down more than 1% earlier in the session. We still have quite a while to go, and there could be some volatility. There is always volatility last few weeks and months, so expect this number to change in the next 4.5 hours. But as of now, it looks very risk off. We have investors, on the other hand, selling treasuries, so 371. That moves the yield up, and that's also risk off for risk assets, especially for stocks. The dollar index is where people are looking for safety. 1321 is the level on the dollar index, so far away from the records that we hit last week, but still pretty strong. And then crude, we're watching very closely as this OPEC meeting comes. We're hearing reports of 2 million barrels of slashed production, and now you see crude down, interestingly enough, 86.01. Maybe the market doesn't buy it, or maybe it's already been priced in somehow. In any case, I'm looking forward to hearing from Manus Craney out of Vienna. Anna?
Yeah, absolutely. We'll be in Vienna for the latest, and oil has run up in with a lot of expectation for that big cut, hasn't it, Matt? This is the picture then for European equity markets, and we are seeing a lot of red today, so a lot of selling, but this in the context of the strength of yesterday. The UK market, for example, the worst of the majors, down by 1.2%, but that's in the context of a Euro Stoxx 50 that more broadly managed to rally over 4% yesterday. So we're not unwinding all of the strength of yesterday, but some of it is going, as you can see. We've got a commodities focus. Matt's talked about oil prices. I have the Brent price on my board here. Also have the natural gas price for Europe, down by 0.9%, was down by more than that earlier on. We talked yesterday about the milder weather. That's still adding a sense of relief, perhaps at the margin, to the gas story. But we've also seen a restart from Gazprom of one of the pipelines through Austria that goes to Italy, which is an interesting development with the new government in place in Italy, or coming into place in Italy. An interesting mood music around the gas story. Brent crude then, as Matt mentioned, the focus very much on Austria, on Vienna, on what OPEC Plus decides to deliver. Another focus for those in oil markets, though, the European Union deciding to agree to a cap, but it's a bit of a complex one. There is a way for Russian gas to be transported around Europe if those who are carrying it can attest that no more was paid than a G7 agreed price. That seems to be the way it's going to work. It's complex business, but 91.41 is where we trade on Brent. UK assets in focus as the Prime Minister is set to speak at the top of the next hour. And will she unashamedly focus on growth once again? Will she give reference, much reference, to fiscal responsibility? If she does that, will it be enough for the markets to remain calm? 114.16 is where we trade. And Tesco, a UK grocery business, down by 3% as the company gave what is described by some analysts as nuanced, by others by a little confusing, the outlook that the company gave. A real focus on the cost of living squeeze, of course, here in the UK. And German discounters, Matt, moving into Tesco's space.
Ah, all right. Very interesting stuff. Now let's get to the big wow story from yesterday that continues to boggle minds today. The world's richest man has found a way to potentially avoid a bruising courtroom battle, but it means paying up big for an asset that was valued little. Elon Musk has revived his $44 billion offer to take over Twitter, an asset that was trading for just $25 billion a couple of days ago. Bloomberg's Ed Ludlow joins us now for the latest. So Ed, pretty interesting snap decision, it looks like, from the Musk camp.
Yeah, I mean, he realized he'd lose. If he went to court in October and the Musk legal team realized that they'd lose, you know, according to one source, Musk's legal team looked at the decisions Kathleen St. Jude McCormick, the Chancery judge, was making in pre-trial, the language she was using, and they thought, if we go to trial in October, we're going to have a really difficult time proving material adverse effects, which is what he would have needed to do in order to walk away from the deal cleanly.
Okay, so he resigned himself to the fact that he was going to have to buy this no matter what, so might as well act now, essentially, is what you're saying. Then it's a question of what comes next, what he ultimately does with Twitter. He's talking about an everything app, X. What exactly would that look like?
Yeah, you know, this is interesting, something akin to WeChat in Asia. You know, the fundamental difference between Twitter and a product like WeChat is Twitter has just 230 million active users. Right. WeChat has more than 1 billion. But in Asia, WeChat is just one example of a super app where you can hail a ride, do your banking, do messaging, order food. And, you know, Musk appears to have this desire, based on the tweets he's been sending overnight, one of which you can see on your screen, to do something similar. You know, he has a background in fintech. He kind of dabbled in that area in the 90s, for want of a better expression. I think, you know, what we learned
fortune there
is part of the discovery process, right? We got these court filings that revealed the text messages Musk sent to many of his close associates, but Jack Dorsey was really key, the founder of Twitter. And, you know, he basically outlined that Twitter needs fundamental change, and he didn't think he could do it if it was a public entity, hence why the take-private deal. But it has some kind of societal and structural problems in the platform that he's talked pretty openly about how he wants to fix, one of which is open sourcing the algorithm. So a new Twitter, let's see.
A new Twitter, let's see. Let's how big he wants it to be, and let's see what regulators say about that. Ed, thanks very much. Bloomberg's Ed Ludlow with the latest on that tech story. Let's turn to oil. OPEC Plus is set to discuss an output cut of as much as 2 million barrels per day when the cartel meets today. Rapidan Energy President Bob McNally spoke with Bloomberg's Manus Cranny in Vienna earlier.
They are in full panic mode. Democrats have thought they got a reprieve when oil prices fell. They're facing very difficult elections in November. That oil price drop has been a blessing. The last thing in the world they want or need is anything that causes prices to start marching upward again.
That's how the politics of this might play out in Washington. Let's head to Vienna, though, where Manus Cranny is standing by. Manus, OPEC Plus gathering for the first in-person meeting in, what, 2.5 years? Why such a hurried gathering?
Recession, global recession. Mazrui, the oil minister for the UAE, we've just doorstepped him, not on camera, print. We will not use OPEC as a political organization. Recession is the one fundamental factor for the OPEC consideration. So there's the pushback from this gathering of OPEC Plus, convened by the bulwarks of OPEC Plus. Saudi Arabia, the Emiratis are here. Really, the concern, the message they're giving now, it's about global recession rather than perhaps the dysfunctionality, the broken market that the Saudi Arabian, His Royal Highness Prince Abdulaziz bin Salman gave to a Saudi newspaper overnight. He's still propagating that. The markets are broken, the dislocation between the physical market and the amount they can actually produce. Still, OPEC Plus is underproducing by about 3 million barrels, but it's very interesting to hear the Emiratis, I suppose, worried about this political pushback from the Biden administration. You've heard Bob there saying they're panicking in the White House. They are in full panic mode there in terms of what they're about to do here, which is cut oil production. He got on a plane. Joe Biden got on a plane, went and fist bumped Mohammed bin Salman to get an oil increase. What has he got? 2 million barrels of a cut. Get ready. No OPEC. Oil production exports possibly to be cut, and more SPR releases to come. Guys.
Manus, thanks very much. Bloomberg's Manus Cranny on the ground for us in Vienna. From one of the drivers, perhaps, of inflation to an economy still reeling from its effects, embattled UK Prime Minister Liz Truss is set to deliver her speech at the Conservative Party conference later today after a bruising first month as Premier. It comes as members of her top team openly push back against her fiscal plans. Bloomberg's Tom McKenzie joins us now from the party conference in Birmingham. So we're seeing open disagreement at the top table then, Tom. What do we expect to hear in around an hour's time?
I mean, really, Anna, that is the point. That is the context. It is almost unprecedented to see a premier, a prime minister, so early on in her leadership role, of course, of the party and the country, facing these kind of divisions, not just within the political party, but also within her own cabinet. What we expect Prime Minister Liz Truss to try to do then in this speech is to regain some of that credibility. She's going to emphasise her desire to build what she describes as a new Britain for a new era. She wants to build an economy, she says, to move away from what she describes as a high-tax, low-growth economy. And, important for the markets, she says she's going to have an iron grip on fiscal responsibility. There may be some eyebrows raised, given what we've seen over the last 10 to 15 days and the market reaction. I talked about the need to build credibility. There's a number of different constituents who she's going to be looking at. Her own party, of course, where there are deep divisions, well documented. Her cabinet, and again, unprecedented to hear the kind of divisions we've seen within her own cabinet over the last few days on some of her key proposals. But of course, amongst the broader public as well, where the polls suggest that the opposition Labour Party have a barn-stomping 30-point lead, at least, according to some of the polls. The markets as well, a key constituency, and we're continuing to look at gilts and the pound as we look ahead to this speech. It doesn't help that the Chancellor of the Exchequer and his team have failed in terms of their communication around when they're going to release their fiscal plan, very closely watched by the markets, and the OBR, the Office for Budget Responsibility, their analysis that goes with that. 1 minute is going to be November the 23rd, the next minute they're bringing it forward. We do know now that it will be brought forward. We don't have a date for that, but that confusion and that lack of clarity does not help, of course, in terms of that credibility. And just very briefly, broadly, the context is, and Bloomberg Economics are doing the maths on this, this is a government that faces having to push through spending cuts of up to £45 billion per year. to meet their GDP goals. So the difficulty is there. There is a lot of hard work that's going to have to be pushed through at this speech and in the days ahead from the Prime Minister.
Yeah, let's see if she tackles that in this speech. Tom, thanks so much for joining us. Tom McKenzie reporting live from Birmingham in the UK. Now, let's go to Zurich. Credit Suisse's market turmoil continues. The bank's business that lends out shares had to reverse transactions with clients in recent days after investors that provided those securities pulled back over concern about the bank's financial health. Bloomberg finance reporter Marian Halftermeyer joins us now to talk about continuing loss of faith, it seems, maybe more cracks at Credit Suisse. What do we see?
Hi there, good morning. So yes, Credit Suisse is continuing to contend with, the fallout of the situation that it's in right now. Obviously, we saw crazy levels of CDS spreads on Monday and then, a record low on the stock. So obviously, there's a lot of concern among clients. They're definitely talking to clients and trying to tell them, look, we are still solid. We have the liquidity. We have the capital buffer. And so to try to appease some of that panic. But obviously, there are a lot of questions being asked.
Yeah, and that makes it very difficult for Credit Suisse to retain talent as well. It seems like every day we see a story about new departures. How many people are actually left at the upper echelons of the bank?
It's hard to say. They've been filling the ranks as people have been leaving. But yes, over the last 2 years, we saw an incredible amount of talent, top deal-making talent in the investment bank leave. We're seeing a number of people leaving out of the Asia private wealth business, which is definitely concerning given that that is a key growth area for them and will be important going forward for them as well.
Marian, thanks very much. Bloomberg's Marian Halftermeyer joining us there with the latest on Credit Suisse reporting from Zurich. Coming up on the program, we'll talk aviation. We are, in fact, live from the World Aviation Festival in Amsterdam. IATA's Director General, Willie Walsh, will be talking to our colleague Guy Johnson shortly. We'll also talk FX markets. Valentin Marinov joins us, Credit Agricole, head of G10 FX Research and Strategy. What is he watching for from the UK Prime Minister's speech, which comes in less than an hour? And how she changed China. Today's Big Take story takes a look at how human rights, US relations, the economy, how they have all changed over Xi's decade of control. Look for that on Bloomberg.com or on the Bloomberg terminal. This is Bloomberg.
CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
The labor shortages, it's all over. It's in the Netherlands, it's in Europe. We see it in restaurants, in bars, at the airport. But we need to solve it, and I think we can solve it, and we urge the airport to solve it soon. The item, we think they could do much better than they did so far.
That was KLM CEO speaking to Bloomberg's Guy Johnson on the sidelines of the World Aviation Festival in Amsterdam earlier today. Guy Johnson joins us now with another interview from that festival. He's joined by the IATA Director General, Willie Walsh. Guy, good morning.
Good morning, Anna. Thank you very much indeed. Yes, I am joined by Willie Walsh, the Director General of IATA. As ever, an optimistic man, despite some of the challenges that Marianne Riddler was just talking about there, the CEO of KLM. Willie, you are normally optimistic. I get the sense that you're kind of super optimistic at the moment. Why?
I wouldn't say super optimistic. I think there are enough pessimists out there. We need a bit of balance.
So you're just the counterweight to that.
Yeah, and you know, to be honest, I can't see genuine reasons to be optimistic. You know, we still are in a recovery stage. It is a strong recovery, stronger than most people had expected. But there's still a long way to go, particularly on international travel, before we get back to where we are in 2019. And a lot of the trends we're seeing are very positive and give me reason to be optimistic.
Europe is still hugely capacity constrained. We're just hearing from Marianne Riddler there, the CEO of KLM. She's dealing with Schiphol, still capacity constrained, and it now looks like the government's going to impose further restrictions as well. Other airports are suffering similar challenges, be it staffing. There are a multitude of factors that are coming through together. Is Europe just going to grow more slowly now from an aviation point of view?
Yeah, regrettably, I think it will. You know, capacity is not available in Europe as it is in other parts of the world. I think the growth opportunity is there, but I think we are going to be constrained by capacity, and that will lead to, you know, reduction in destinations served from Europe. It's going to lead to higher prices because you'll get an imbalance between the demand and supply, because I think demand will outstrip supply going forward. So it's going to be challenging. And you know, when you see the measures being taken by the government here in the Netherlands to restrict Schiphol, to be honest, I don't understand it. I'm not sure that they fully understood the implications that would have for the operation of the hub at Schiphol, but it's going to have major impact.
Do you think other airports, other governments will follow suit?
I think it's going to be interesting to watch. You know, I'm always optimistic that governments look at others, and when they see them make mistakes, they don't make those mistakes. And in fact, some of the measures I'm seeing here, I'm surprised, because if you go back in 2008, they introduced a ticket tax here in the Netherlands, and it surprised them that it didn't generate the revenues that they were expecting. And the reason it didn't generate the revenues is people still flew, but they didn't fly from the Netherlands. They drove across the border. They flew from airports in Germany, and that's what's going to happen. You know, some of these decisions, I think, are being driven by a genuine desire to address the environmental challenge. But it's not actually going to make any difference, because you're just going to transfer the problem from Schiphol to other airports around Europe, who will be glad to take the you know, the business that Schiphol is turning away.
So the answer from the Netherlands government has been to talk about, they haven't yet fully imposed it, still working through the process, a almost permanent cap on capacity at Schiphol. There are other opportunities that Europe could grasp, though, the European governments could grasp. One of those would be to improve air traffic control, single skies. Do you get the feeling that European governments don't want to take some of these difficult decisions? And I'm wondering why, when there's such an emphasis at the moment on reducing carbon footprints, making the aviation industry more sustainable, why are government not making some of the changes that could be made, such as single skies?
Well, governments like to be popular, you know, so they look to decisions that they think will be popular with the electorate. The single European sky is a scandal. It is a scandal. You know, we get politicians telling us as an industry how we must improve. And yet, through the implementation of a single European sky in Europe, you could reduce CO2 from the industry by 10 to 12%. It's available now. No investment required. The technology is there. We want to do it, and it would make a huge difference to
I hope everybody can hear you. We're in a kind of very big open hall here, and it is incredibly noisy. The Single Skies proposal is to basically make the skies of Europe more efficient, you can...
Yeah. So it's single, the problem in Europe today is we have inbuilt inefficiency. It's structurally inefficient in Europe and can be significantly improved, but it requires political will. It doesn't require technology, it doesn't require money, it just requires politicians to agree on a better system for Europe. We've been debating it for, 50 years. Yeah. It's done on the ground. Schengen is an example of what it is. You have seamless travel around the Schengen area. You could do the same in the air.
You and I were just on stage a moment ago. You were talking about the ICO meeting that is taking place in Montreal. The expectation, the hope is that that meeting is going to produce an industry-wide agreement on emissions reductions. You said that you'd gone within a week from 4 out of 5 degree of certainty that it would happen to 4.8. Why the 0.8?
Yeah, I'd prefer to work on a scale of 10. But, having spent a few days in Montreal, having met several key transport ministers, listened to what it is they were saying, listen to their optimism around the prospect of reaching agreement. I think the language that was being used, the rhetoric had been toned down quite a bit, so I think there's good reason to be optimistic that we can get an agreement. Now, in my opinion, if ICAO fails to reach an agreement, then it will be a failure of the Assembly. It's not going to stop the industry, airlines, continuing on the path to net zero in 2050, but it would be so much better if you had governments and industry aligned on the same goal, on the same target. I think it would help to provide the sort of policy framework that will make it easier for the airlines to achieve their goal.
Let me just ask you a slightly cheeky question as we wrap up. You're a former CEO of IAG. Does British Airways still fit into IAG?
Oh, yeah, without question. I think the model is a sound model. I don't see any reason why you wouldn't continue to do it. Now, we structured it in a way where it could be broken up if necessary, because, that was, from my point of view, certainly the best way to impose good financial discipline on all the parts of the group. But no, I think it's definitely right to have it in IAG.
Willie Walsh, always a pleasure. Nice to catch up. Thank you very much indeed. The Director General of IATA. Kayleigh, back to you.
All right, Bloomberg's Guy Johnson, thank you so much at that aviation festival in Amsterdam, and IATA Director General Willie Walsh as well. Thank you so much for joining him. Now let's keep you up to date with other news from around the world with the first word. President Biden has pledged an additional $625 million in weapons to Ukraine. The package includes long-range rockets, ammunition, and armored vehicles. The president spoke with Ukraine's President Volodymyr Zelensky on Tuesday. The European Union has backed a new set of sanctions on Russia. Bloomberg has learned it includes support for a price cap on oil sales to third countries. The sanctions also target a range of individuals and entities, including senior Russian officials and those involved in staging the recent widely condemned referendums. And former President Trump wants the Supreme Court to intervene in the fight over government papers seized at his home in Florida. He's asked the justices to let a special master review 100 documents with classified markings. The Justice Department is investigating whether the former president illegally took sensitive government records when he left office. And Elon Musk's decision to revive his $44 billion takeover of Twitter is great news for a number of investors. They include billionaire Carl Icahn and arbitrage traders who continue to bet on the outcome of the deal, even through months of uncertainty. After Musk said he would proceed with the deal at the original offer price, Twitter stock rallied as much as 23%. And yet we are, Matt, seeing some of those gains unwinding just a touch in pre-market trading this morning, and Twitter still remains below that $54.20 offer price. It really never passed it, even all the way back in April when this deal was first announced.
Yeah, I think there are so many question marks still over this story. Does the lawsuit continue, or does Twitter pull that? How soon will this deal close, if it closes at all? Indeed, there are some critics on Twitter who say this would be like getting two divorced people who hate each other to remarry. On the other hand, I think it's pretty exciting to think that Twitter could be something more. It could be a payment app. It could be a shopping app. It could be the WeChat, I guess, of the rest of the world.
Yeah, absolutely. Although I spoke to our colleague Alex Webb earlier, who was saying that regulators in Western countries seem to be less in favor of that kind of flexing of your power from one sector to another than they tolerate in China. But we'll see whether that comes to pass with this app known as X. I think that is it. Right, yeah. So they got some way. Valentin Marinov joins us next. We'll talk FX. This is Bloomberg.
nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Elon Musk's U-turn. He revives his $44 billion buyout bid for Twitter in what may be an attempt to avoid a trial. It would be the biggest production cut since 2020 for the oil cartel. OPEC and its allies are weighing whether to reduce output by as much as 2 million barrels a day. And problems keep mounting for Credit Suisse. One of the bank's units that lends out shares had to reverse some transactions after clients got spooked by its financial health. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, today looks really different to yesterday, but the gains of yesterday were quite stunning, really, all on expectations, premature as that might be, around a Fed pivot. That got the market really excited yesterday. Today, we dial back a little bit.
Yeah, I don't know where the market was getting that, since we were just recently reassured by like every single Fed governor that that wasn't coming anytime soon. But maybe it was something else that sparked a rally. You know, Julian Emanuel, I keep reminding everyone, in the weekend had a note out saying that a bear market rally was coming, and a number of other people were on board with that, so the market made it happen. We were up almost 200 points on the S&P over the last two sessions. We got to 3790. Right now, futures are down about 0.75%. I warned of some volatility before the market opened, but we haven't seen any move really in this over at least the last half hour. We were down a little more than 1% earlier in the session. Investors are selling 10-year bonds, pushing the yield higher right now. It's about 7 basis points up to 370, 371. So that is a negative for equities, as is the stronger U.S. dollar, especially overseas. Right now we're at 1322 on the Bloomberg U.S. dollar index. So back with some strength, not back to the highs, but we're relatively high considering where we've been in recent history. And then NYMEX crude. Interesting to see it come down. We're all awaiting the OPEC decision. Talk of a 2 million barrel production cut should drive the price higher, although, as you mentioned, Anna, it has come higher already in the last few sessions, so maybe that's priced in, although the number seems really high. We'll see what we get. Kaylee, what do you see in terms of pre-market movers?
Well, of course, I continue to watch the story we've all been watching over the last day, and that is related to Twitter and Elon Musk's takeover of it after he sent Twitter a letter saying, actually, I will buy you for $54.20 a share. Go ahead with that original plan for a $44 billion purchase. We saw Twitter rally in a huge way on the back of that yesterday, up about 22%, giving just a little bit of that gain back, though, in pre-market trading this morning, down about 0.5%, trading at $51.72 a share, so still below that offer price. Meanwhile, Tesla is down about 1 percentage point. But that's really emblematic of the losses we are seeing across big tech this morning, as we are seeing treasury yields move back up, as Matt was talking about. The likes of Amazon and NVIDIA each also down by about 0.75%, Anna.
Yeah, it seems from markets to UK politics to Twitter, it's a week for U-turns, isn't it, Kaylee? We've had a lot of them. This is what we've got on European equity markets right now. U-turning from yesterday's gains, down by 0.7% after 2 days of strength, 2 days of thinking, are we going to see a pivot? Are we nearly there yet? The market's just pausing for thought on that one. Natural gas prices actually jumping now. These were actually weaker earlier on today because we've seen a restoration of flows from Gazprom through Austria into Italy. That had been a pipeline that was disrupted over the weekend. That was restored, and that had put some downward pressure on the gas price, but just jumping up by 4%. It is really volatile, very much off highs, 169 euros per megawatt hour, not as high as that has been, of course. Brent crude, 91.42. As Matt said, we're approaching OPEC plus. That is the real focus for oil markets. We've also seen, though, some sort of cap being put in place, agreed by the EU as part of the latest sanctions package. That, no doubt, something we'll talk to our guest about when it comes to commodities and the oil space. And the pound at 114.04, setting us up nicely for our conversation next with Valentin Marinov. We will no doubt talk about the pound, other currencies, of course, as well. But the pound down by 0.6%. We'll be focused on Liz Truss, the Prime Minister, Kaylee, and what she has to say at the start of the next hour.
Absolutely, Anna. I look at the market moves today, the dollar back moving to the upside, yields moving to the upside, stocks once again moving down, and it just raises the question of whether once again we were too early with the whole peak yields, peak dollar, peak hawkishness narrative. Let's pass that question along to Valentin Marinov, Credit Agricole head of G10 FX Research and Strategy, who is joining us now. Valentin, it's been all about the pivot for the last several days, the idea that maybe we have seen the peak among all of these different things. What do you buy of that narrative?
Well, the fundamental reasons for that seem to be the peak we've seen in inflation expectations in the U.S. in particular, and some concerns that forward-looking measures, the ISMs, were less promising overall. And I guess the big worry this week is that for the first time in a while, the U.S. labor market data on Friday will signal a more tangible cooling down in part in response to what the Fed is doing. We think that overall the Fed is not necessarily that far off from peaking. We believe that the Fed tightening cycle will peak at around 425 in December, so really not that far away from now. So I think there is some credence to what's happening in the markets from here. Whether this will result in a peak dollar, that's another question altogether. Because when it comes to the dollar, it's really about the dollar smile, and that means there are two key drivers there. One is the Fed's tightening, which has been a big support, but the other important driver is risk aversion, and that seems to be continuing, and we do not really see a let-up anytime soon. So that is a reason to remain fairly constructive on the dollar for the time being.
Okay, fairly constructive on the dollar. Valentin, good to see you. What's the attitude towards the pound, though? And what are you, crucially, what are you watching for next hour? We hear from the Prime Minister. If she continues to talk about being unashamedly focused on growth and not talking about debt, is that going to spook markets, or are we're aware of that stance now, so it won't?
Well, after a couple of U-turns already, that may come as a bit of a disappointment. I think there is some expectation in the markets that reason will prevail maybe in the near term, and that could ultimately really lead to a kind of some abatement in the sovereign credit risks. That was the key negative for the pound. And I think today, I mean, the one variable, the one really series I'll be watching will be the 5-year UK sovereign CDS spread. Really see how it responds to what Prime Minister Truss has to say. If that spread, which is still at 5-year highs, I mean, despite everything, despite all the U-turns, investors continue to worry. If that remains there or continues to widen, that actually could be pretty negative for the pound.
It's clear to see that the Bank of England is taking action at the long end of the gilt curve. We know they are. They told us that. Are they also providing some sort of sticking plaster for sentiment around UK assets more widely? Will the middle of October matter for FX?
Well, I mean, it is the case that it did help. It certainly brought down that pressure, and on the whole, because the pound has stabilized, down the expectations of more aggressive rate hikes to stabilize the currency have come off the boil as well. It is essentially helping ease the financial conditions in the UK. It remains to be seen, however, how long this could last, because if at the same time sovereign credit risks continue to grow and that continues to push like real rates, real yields in the UK higher, then that's not really a positive outcome for the currency. So as you said, it's really just a band-aid. It's a plaster that may be helping the pound for the moment, but it may be only a temporary reprieve. So as a result, I think that longer-term risks for the pound from current levels could be to the downside into year-end and into early 2023.
Kaylee was talking about the Kiwi earlier, you know, as one of the only currencies gaining against the dollar today. If you look year to date, we see very few, right? The real, the peso, pretty much the only ones. Where do you see any other currency giving the greenback a run for its money, so to speak?
Well, I think that it really depends on the horizon, but from here, we think that the global economy is going to cool down significantly. We expect mild recessions in both the US, the Eurozone, again, Europe as a whole, really, where the recession could be somewhat deeper. And that, I think, will continue to support safe havens like the Japanese yen. I mean, the big difference between the yen, the euro, and the pound is that in real effective exchange rate terms, in valuation terms, the yen is cheap. It is ultra cheap. So if essentially there is value for money, that'll be the Japanese yen. So with a 3 to 6 month horizon, assuming that the Fed will be peaking around December, and given that we're going to have a change of guard at the helm of the BOJ really around March time, I think that's really a bearish bet on dollar yen, really potentially targeting 135 or potentially lower, could be interesting indeed. It helps to view the fact that the BOJ has so far convinced the markets that they mean business when they intervened in the dollar yen. So essentially they stopped that relentless rise in dollar yen.
Very interesting stuff. We've heard of some Fidelity, for example, buying the yen right now, as well as other what would be considered safe haven currencies. Are you concerned about a deeper, more prolonged recession, especially for the U.S.? We've been hearing short and shallow for so long.
Well, I think our central case is still for a mild recession, and it's the case that really it's a matter of when, not if anymore. I think that is what may be driving that peak hawkishness narrative in recent days. I should mention that even with a recession, I mean, the U.S. economy should certainly fare better than its European counterparts. Whatever happens to the U.S. economy, we think that really the slowdown that we are expecting for the Eurozone, for the UK, is going to be potentially more damaging, more dangerous for the currencies. So even with that in mind, I think we maintain fairly bearish outlook for both cable and euro dollar into year end and into the essentially first quarter, second quarter of next year.
Valentin, thanks very much for your time. Good to see you. Valentin Marinov joining us there from Credit Agricole. Coming up on the program, we'll get back to commodity markets and OPEC Plus's big decision. Caroline Bain joins us, Capital Economics Chief Commodities Economist. We'll get her take on what's happening in Vienna and perhaps a little on what's going on in Brussels as well. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of a solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Now, OPEC Plus is considering its biggest production cut since 2020 when the group meets today. A larger reduction, as much as 2 million barrels a day, is on the cards. That will spark pushback from the US and may fan global inflation. Joining us now is Caroline Bain, Chief Commodities Economist at Capital Economics. Well, let's start with the basics, Caroline. Good to speak to you. What are you expecting to see today? What do you think will be the conclusion of OPEC Plus and their deliberations?
Well, it certainly looks as though a quite significant cut to production is on the cards now. OPEC have been drip feeding us rumours of the size of the cut, culminating in a report of maybe 2 million barrels a day, which came out over the last couple of days. At this point, I think if they cut by anything much less than 1 million barrels a day, we could actually see prices fall because they've geared the market up for quite a cut.
Yeah, this seems like the new central bank hike. We're talking about 50, then it's 75. Go ahead and do 100. Just 2 days ago, or maybe was it yesterday, we were talking about 1 million and now it's 2 million. I mean, is anything going to move this market?
I suppose the market is fully aware that the cutting quota is a little bit notional, given that OPEC Plus is producing so much below its quota at the moment. So we estimate about 3.6 million barrels below quota was the production in August. So the actual cut to supply is going to be much less. We estimate that if OPEC Plus decide to cut by 2 million barrels per day, the physical cut to supply will probably be closer to 1 million.
The concern is, of course, recession. As people tighten their belts, they're going to drive less. I know my wife was yelling at me for how much I spend at the pump just yesterday. But what will this do to prices, Caroline, that consumers are paying here in the U.S. and over in Europe?
Well, I think it's worth noting that obviously prices have risen in the last couple of days as news this potential cut has been factored in. They've risen from, in terms of Brent anyway, close to 80 to now close to 90. In some ways, we could have expected a much bigger jump. There is quite a lot of negative sentiment in the market about the outlook for demand. And that's a point I'd quite like to make. I really feel there's a disconnect at the moment between the financial market, oil market, and the physical market for oil. Perhaps rather surprisingly, we haven't seen a huge demand response to the high prices that we've had for most of this year. And globally, stocks are very, very low. So it's not a normal time for OPEC to necessarily be cutting production.
Well, on the subject of just supply and how tight the physical market may be, can anyone else fill the void if OPEC decides to proceed with a large output cut? I mean, the U.S. has been begging them to pump more oil. Is there anything the U.S., for example, would be able to do to plug that gap?
Well, U.S. production is still quite a bit lower than its peak, pre-pandemic peak. It's about 1.2 million barrels less than it was before the pandemic. There's very little sign that we're going to see a big increase in U.S. production. There seems to be very little appetite amongst the shale producers to start raising output. I suppose it will depend a little bit what happens to prices, but we saw prices up at 130, 140 earlier this year, and we still didn't see a big supply response from the US. So it's not immediately obvious to me who could fill the gap.
Caroline, what's the role of Russian oil at this point? Because obviously OPEC Plus includes Russia. There are Russians there in Vienna. We have a new European sanctions story today, tying up loose ends perhaps on some sanctions that have been talked for a while. But one of those is on oil. So the story is about how the EU is backing Russian sanctions, including an oil price cap. How would you expect an oil price cap to function, to work?
I'm a bit skeptical about how well it will function, actually. obviously the idea is that there'll be a cap on how much countries pay Russia for oil. It's quite hard for me to see that Russia can continue producing as much as it is if it loses the entire European market come December, which is still on the cards. So I find it difficult to imagine that Russia will be able to sell all of its oil to other consumers, especially during a global downturn. China's imports this year are already down 10%. Admittedly, their imports from Russia are up, but they're just. We've certainly have penciled in rather a large drop in Russian production, regardless of what OPEC Plus decide today, just as a result of difficulty in finding markets, and also technical problems as they lose access to Western machinery and need to do maintenance, etc.
Okay, Caroline, thanks very much for your insights. Caroline Bain, Capital Economics Chief Commodities Economist, joining us with thoughts on OPEC Plus and beyond. Coming up later today, we'll be speaking to the WTO Director General. That conversation at 7 a.m. in New York, 12 p.m. in London. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close, weekdays on Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kayleigh Lyons in New York and Anna Edwards in London. Now, Elon Musk has revived his $44 billion offer to take over Twitter. The move backtracks, obviously, on his effort to quit the deal and potentially avoids a contentious courtroom fight. Maybe that's why he did it. Joining us now is Bloomberg Quick Takes' Alex Webb. And Alex, before we get to, why he came back and who's still on board to pay for this, I'm excited about his super app idea. He tweeted out about X, an app for everything, and a lot of people have compared it to the Chinese app WeChat, with which I'm not at all familiar, but I do know Amazon seems to be my everything store, as well as, you know, provider of entertainment and devices on which to read, etc. They even own, in a sense, the Washington Post. I mean, if they can do it, can Elon Musk challenge them with Twitter?
It sounds great on paper, and it's a good story to tell your debt investors who are maybe starting to quake a little bit given the way that interest rates have evolved since the deal was agreed. A lot of things need to happen to make it compelling. You need, frankly, to have a payment tier to glue all these things together. That is actually what sort of the Chinese apps like WeChat and of course, you have Alipay gluing a lot of the various services that super apps offer together. And in order for that payment service to work, you probably need to have a user base that's willing to adopt it. Now, look at all the spammy content on Twitter. Would you be willing to hand over your payment details to the organization the way it's currently set up? Personally, I'm not sure I would. So there's a lot that needs to happen for it to reach that super app status, and it's not a clear path.
Well, and you also just have to have this deal come to completion before any of that can happen, Alex, which raises the question of financing. Is it still secure?
Well, there's $12.5 billion of financing that had been lined up. A lot of those banks, you might find it's hard for them to back out of it. The struggle they're going to have is the refinancing piece. They're going to institutional investors and selling, you know, these loans are sort of long-term debt. There's a $3 billion piece that was unsecured. That is perhaps the element which has the largest question marks over it. Now, obviously, Elon has access to other capital. He's worth still, despite the decline of Tesla stock, in excess of $200 billion. So it doesn't necessarily mean that there's no way this deal can happen. But if you look at the share price reaction, it's still below that $54.20. So the market is clearly saying something about the probability of its being completed.
Yeah, it got back towards the offer price, didn't it? But not quite there. A little bit of execution risk still priced in. But you know, 52 is much higher than 42, which is what it was before this about turn from Elon Musk. So let's go back to the beginning, in a sense, then, Alex. I mean, what drove him to U-turn here? Was it all about avoiding disclosing information in court, or has he really had a change of heart?
So caveat everything with, we have no idea what's happening inside Elon's head. But look, it didn't all get particularly well. There'd been about a half dozen hearings in advance of this court case, things like Elon trying to push the case back to February. The judge had ruled in Twitter's favor. The Twitter lawyers had tried to secure and ultimately succeeded in securing the communications between Elon and his bankers. Another thing he lost, plenty of other examples besides. The direction of travel was not looking good for him. So why go up in court, get up on the stand, make yourself vulnerable to disclosing sensitive and potentially embarrassing information, and then still have to pony up the $54.20 at the end of the day anyway? So cut your losses, get ahead of it, and perhaps pay for it. I can imagine that might have been his decision.
All right, Alex Webb trying his best to be a mind reader. Thank you so much for joining us. Now let's take a look at what else is ahead today. The UK Prime Minister, new Prime Minister Liz Truss, will be addressing the Conservative Party conference in Birmingham at 6 a.m. New York time, so just minutes from now. We will bring you live coverage of that, and you can also follow it on our Top Live blog or T-Live Go on the terminal. Plus, OPEC Plus will be meeting at its headquarters in Vienna. Will it cut production by 2 million barrels per day? Then in Fed speak, Atlanta Fed President Raphael Bostic will be giving a speech at 4 p.m. Eastern time. And we'll get some U.S. economic data as well, including MBA mortgage applications and the ISM Services Index. And as always, we're watching the data map, but it's definitely one of those days where the pivot narrative seems like it might be going back the other way as we see yields in the dollar rising once again and equities on the back foot.
Yeah, it is interesting to see how this reversal has happened. I'm not sure where the pivot idea came from. I know that a lot of traders are wishful, a lot of fund managers are hopeful, but it doesn't seem to me that any sign has come out that the Fed is willing to bend yet.
No, not from the Fed themselves, just a bit of US ISM and JOLTS data, and that's all it seemed to take. But that was just 2 days. We're back into negative territory, as Kaylee says, today. So interesting to watch the UK Prime Minister as she delivers her speech to the Conservative Party conference. How will the markets handle her messaging? Surveillance is next. This is Bloomberg.
successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Inflation is the #1 priority. Until inflation is under control, monetary policy will still have to chase inflation, trying to cap it.
I think central banks will still be hawkish. Inflation will still be stronger than they want.
Markets in general are looking for a sign that maybe central banks are, reaching the highest level of rates that they can get.
Don't count volatility out now, even though we're kind of dropping back to 20 handle levels.
There's a global shift towards a higher returns environment, but you can't get there all in one go.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures down by about 1 full percentage point. TK following the biggest two-day pop on the S&P since April 2020.
Anybody believe in it? I'm out there searching. I can't find a soul that believes in it. I love the phrase. I don't even know who to give citation to. It's just a decidedly Wednesday. I mean, that's all there is to it. It's decidedly defensive, and that's where we are.
The UN has complained about Federal Reserve policy, Bramo. Equity market bulls have complained about Federal Reserve policy, and now the WTO is complaining about central bank policy.
Basically saying they are risking an overshoot. They are going to cause recessions. They're talking about some of the exogenous issues. They're also talking about food insecurity, debt distress. How much is this the rest of the world's problem and not the United States' problem? We've been talking about this. The narrative of this week in markets is the Fed will blink, and that will be good for risk assets. We've heard a lot of pushback to that, and we will continue to hear pushback to that if we continue to get the data that we have, which is deteriorating.
Seemingly no one's told the Fed, because the Fed doesn't know that yet. That's not what I hear from the Fed speak. And then job openings yesterday just fueled this idea that we can engineer this soft landing without a doubt. Yeah. Dropping by more than 1 million, that was a real move lower.
It was the biggest move lower, the biggest drop going back to 2020 also. So, if you start to see this, perhaps this is a perfect scenario for the Fed where you start to see companies not necessarily lay people off, but reduce the openings that they have. All that said, to your point, John, Fed officials still coming out and saying, we're not going to blink. Just quit it. We have to raise rates more, and you guys have to believe in us.
John, why does the WTO just out matter? Because they nailed it last time.
Oh,
they
the growth
were
story?
out front
Sure.
of everyone saying, I'm sorry, it's slower than you think. There's a number of headlines here, but 2.3%. The rule of thumb on global growth, folks, is 3%. So 2.3% is a recession.
Smells like a global recession.
It's not NBER, it's not this, it's not that, but I'm sorry, that statistic is ugly.
Would you like to squeeze in some Twitter?
Oh, please.
No, you don't fancy
I tweeted
that?
this morning.
Okay. Is that the extent of the Twitter conversation this morning?
It's a good vehicle for talking about the tots.
At least they're trading
what
just
are we going to do here with Elon?
They're trading just beneath the offer in the pre-market at 51.73.
So he comes out, he says 54.20, back on, let's go. What this makes me think about is all those banks that committed to financing in April when the financing costs were incredibly cheaper relative to where they are now. Are they going to be on the hook for those losses, the mark-to-market losses, as they try to offload this debt? And what kind of disruptive effect does it have on the rest of credit markets?
This market has changed so much since April.
I know.
On the equity side, Tom, on the debt side too.
Yeah, it is, and it's going to be fun here going into the jobs report on Friday. On Elon Musk, how much is he paying up? All you need to do is go to the BQ screen in the terminal, boom. Twitter is over double the valuation on price to sales of Facebook and of Snap. I've never used Snap.
No, don't know how to use it. Snap's down about 70% from the April highs.
Yeah.
That gives you an idea of how much some of these social media companies have corrected when this deal was done at this price.
And it was still thought to be overpriced at that time. And now how much evaluations changed. And again, I keep going back to the debt financing because that has a broader, more systemic reach than just the valuation of one tech company.
It's contingent on the debt coming through. It's
Let's
contingent on that. I
mean, but they made commitments.
We'll see. That's the question. We're going to catch up with Ed Ludlow a little bit later this morning. He's going to pop into the studio. Twitter down just a little bit, down 0.5% in the pre-market. Your broader equity market shaping up as follows. On the S&P 500, biggest two-day pop on the S&P, going all the way back to April 2020. We fade that this morning. We're down 0.9%. More recently, you've seen a bid come into the bond market, 370, 369, 88 yields up just a little bit this morning on the session, up 6 or 7 basis points. We saw some dollar weakness. The dollar strength returns, euro dollar 99.24, euro dollar negative 0.6%. And there is a big conversation, Lisa, about some big output cuts at OPEC plus. Crude 86.29, call it 86.30. We're down 0.2%.
This to me matters. OPEC plus meeting for the first time in person going back to the pandemic, potentially cutting by 2 million barrels the production of OPEC plus nations. This comes at a time when a lot of the Western nations still want to see lower prices. This is the offset to inflation. This goes against that. We're already hearing about potential pushback from President Biden's administration, what they could potentially do to offset the reduction in some of the production. Try to wrap your head around this. And nonetheless, Brent has really fallen so much. Do we see a pop back to the high 90s like a lot of people are expecting? We get a bunch of central banks speak. Perhaps they will come out and say, okay, markets, you guys are right, we're wrong. I doubt it. Fed speakers include San Francisco Fed President Mary Daly, who yesterday was adamant about the effect of inflation on lower income households, how punitive it is. She reiterated the point that you need to have price stability before you have a steady labor economy. Atlanta Fed President Raphael Bostic, and there is an ECB non-monetary policy meeting in Cyprus. Do they talk at all about the potential ramifications of the rapid tightening? And we have seen yields on the overall Bloomberg Global Aggregate Index absolutely skyrocket versus where they were back in 2020. Sub 1%, now north of 3.5%. That is the global average. How much do you get actually central banks pushing back versus saying, let's go. This is what we need to curb inflation. And at 10 a.m., we get the U.S. ISM September Services Index. Just want to point out, we've gotten a lot of negative surprises. We talk about jolts yesterday. We talk about ISM manufacturing data that came in weaker than expected. This is what the Fed wants to see. They want to see a softening. What we have seen is several steady months of negative reads, negative surprises. And John, this is interesting. Is this a positive scenario for global markets? Are people getting comfort from this, saying the economy is moving faster than perhaps the Federal Reserve is realizing?
Elisa, great work. Thank you. Another data point to look out for a little bit later, and a ton of Fed speak as well that we're all excited about. Christian Nolting joins us now, the Global CIO at Deutsche Bank Private Bank. Christian, I've asked this question so many times this year, every time we've had a bounce. A bear market rally or something more durable? What is it?
Well, I would say, first of all, it's good that markets also can turn upwards. So that was not the case for some time. I would still say the markets have to go through the earnings season first, and I would expect that to be a volatile environment because I think the market is probably too optimistic about the earnings. From that perspective, I would say we probably see some downside from that perspective. However, then I think in Q4, as inflation is probably not moving, especially in the US, not moving much higher, I think there could be opportunities for investors to move in.
Christian Nolting, the leadership of David Folkerts Landau at Deutsche Bank is simple. When the facts change, David Folkerts Landau changes. Are the facts changing for central banks where, you know, not the modern cliche, will they blink, but are they going to amend and adjust through October?
Now, first I have to defend David here. I have to say he was very early with coming up with a recession. I think he was the first in the market, and we had good discussions about this. And now we see not facts of a recession, but I think there's more agreement, I would call, in markets that we probably go through a recession. And in the US, it might be a mild recession to be seen. I would be at least more bullish on the US than in Europe, where we think the times and the next months could be even more, let's say, costing more growth depending on the weather we have right here.
Christian, what would you be buying? You said that at some point there will be a dip. What will be your first number of purchases? A lot of people talk about how it's going to be duration, and we've seen that, right? We've seen longer dated treasuries really lead any rally. Do you get behind that kind of view?
Yeah, so certainly we think in this quarter, in the fourth quarter of the year, I think fixed income has some value. We call it now income is back in fixed income because we think if growth comes down, which is our forecast, and I think that's what the market is also thinking, then the rise in yields, the massive rise you've been just showing, could stop at one point in time, and that offers opportunity.
Christian, just a final question on the job openings yesterday, the JOLTS data. It dropped by more than 1 million. Pretty stunning number that really fueled this equity market drive. Can I ask you whether you think that's because those jobs got filled or because of economic weakness, those jobs openings got taken away?
I think it's not a 0-100. So I think probably it's a mixture of both. But at least from that perspective, I thought it was a good sign that there is some reaction already of Fed policy. And it's not only monetary policy, it's also the environment, of course, is getting a bit tougher. You have QT as well. So from that perspective, I think that's to be seen positive. And that's why we think the Fed is not going 75 steps in the consecutive meetings. Probably the next one still, but then we think, and that's what the market views as well, so we agree to that, it comes down from there.
It certainly was
but
seen
it
positively.
needs to see the unemployment rate to move up. I think that's crucial.
Well, we've got to wait for Friday for that. Christian, thank you. Christian Nolding at Deutsche Bank, Private Bank. Claims sub 200K. Job openings dropping by more than 1 million. And for a more complete picture of the labour market, Lisa, you've got to wait until Friday.
Yeah, although, again, is that going to be enough, right? We got some information. Pantheon Macro, for example, said if we get more information like the ones that we got yesterday with the JOLTS data coming in that much, that will be enough for the Fed to take a pause. On the flip side, inflation is still running hot. And you can't hire enough people, and you still hear that from a lot of companies.
The line we've repeated all week, you can't fire what you couldn't hire. Didn't that just speak to jobless claims where they are and where jobless claims were last week and where job openings are now?
Well, this goes really to the point that we were talking about earlier this week, which is what if this is not a good indicator for the Federal Reserve to really track, to understand how much the froth is coming out of the market and how quickly inflation can come down?
It was a recipe to dream about a soft landing all over again, Tom. The dream is back. And that's why you see this equity
Should we
market
talk
rip.
about a prime minister who has a dream?
I'm not sure that prime minister is living the dream right now.
She's living the dream right now. The prime minister speaks. Is it in Birmingham?
It is in Birmingham.
Just explain to our American audience, waking up in America, the symbolism you see here, John.
It's a difficult moment for this prime minister. This is not the moment that I think this prime minister dreamt about when she first got this job only a month ago. Are we going to see another U-turn here on a whole range of issues, or will they double down? Now, there was a conversation at this time yesterday morning, as to whether that budget would be brought forward ahead of the Bank of England decision, and we got some freezing cold water poured over that. So the next month, I think, is going to be fascinating. Middle of October, Lisa, you know the dates. That's when the gilt market operation ends. November 3rd is when the Bank of England meets, and then apparently you've got to wait for a budget.
And she set the precedent. If the facts change, she says she changes. Well, it seems like the pushback has only continued. So does her response also continue?
Did the WTO weigh in on that as well?
You really are still bitter about the IMF,
no, I just
right?
think the IMF, the UN, the WTO.
I know.
I mean, clearly there are some very, very difficult, complex things going on right now that is getting the attention of organisations that typically wouldn't weigh in on some of these things.
That's diplomatic. Wow.
Thank you.
That was restrained.
Oh, we've only just started. Give me a chance. Futures positive. Through yesterday, we're down this morning by 9 cents at 1% on the S&P. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The European Union has backed a new set of sanctions on Russia. Bloomberg's learned it includes support for a price cap on oil sales to third countries. Now, the sanctions also target a range of individuals and entities, including senior Russian officials and those involved in staging the recent widely condemned referendums. OPEC and its allies may make their biggest cut in oil output since 2020. The move to stabilize prices risks cranking up tensions with the U.S. At their meeting in Vienna today, OPEC Plus energy ministers will discuss cutting production by as much as 2 million barrels a day. Now, that could lead to higher gasoline prices for U.S. drivers. The world's richest person has found a way to potentially avoid a bruising courtroom battle. Elon Musk has revived his $44 billion offer to take over Twitter. Now, that proposal likely eliminates the need for a trial over whether Musk should be forced to go forward with the purchase. Bloomberg's learned that Musk's legal team sensed that the case was not going well. President Biden has pledged an additional $625 million in weapons to Ukraine. The package includes long-range rockets, ammunition, and armored vehicles. The president spoke with UK's President Volodymyr Zelensky on Tuesday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
When the price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between two of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the two account for about a quarter of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding, and the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
When you've had your fill of IPOs, ETFs, and CPI,
tune into the lineup for some NFL, NBA, and MLB. Did you retire too early? I mean, look at some of these payouts.
I absolutely retired too early.
For the inside scoop on sports betting, catch the lineup right here on Bloomberg.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this
How
story.
are you thinking about those dynamics?
August jobs were right on target.
Pretty much in line with what Wall Street expected.
A Goldilocks jobs report.
This Friday, the surveillance team brings you the crucial jobs data and expert analysis at terminal speed.
Does this imply that central banks will blink?
They want to see a little bit more slack in this labor market.
I don't think the Fed wants to see unhappy people.
There is a lot of monetary contraction and austerity coming down the pipe.
The September Jobs Report, Friday on Bloomberg Television and Radio.
Inflation is the number one priority. Until inflation is under control, monetary policy will still have to chase inflation, trying to cap it, and that's where financial conditions are tight, and you can get accidents as well. So there can be no rest for financial stability until we tame the inflation side of things as well. The two are intertwined.
Wonderful to hear from Jeff Yu, BNY Mellon senior market strategist on the FX market at the moment. Sterling dominated much of the concerns a couple of weeks back. Liz Truss, the British Prime Minister, addressing the Conservative Party faithful in Birmingham, England at the moment. One headline from that: stormy days facing the UK. I understand, Tom, she came out to the song by M People, Moving On Up.
Just who do you think you are? Stop acting like some kind of star. Just who do you think you are?
Take it like a man.
Take it like a man, Prime Minister, if that's what you are.
Yeah, I'm not sure who those lyrics were aimed at, Tom, but the Prime Minister's address continues.
It's a symbolism thing. It's a big deal. In America, this song, when they come out to it, it's like a huge deal.
Yeah.
All the symbolism.
You think that was a big deal, M People?
You tell me.
I've got no idea.
I don't know. Let's continue here, and we will continue with Twitter. We're going to try to give you a sharp discussion here of the distinctions for Mr. Musk, for the company, and for global Wall Street right now. Edward Ludlow's followed this from the very beginning. Let me get this straight. It's at near 8 times sales. Right. The competition's at 3 or 4 times sales. He's grossly overpaying, and he's got to sell the story to Wall Street. What will they listen for?
Well, you know, as part of the discovery process and through the court filings, Musk's only consistency was that he wants to make big changes to the platform that could only be done if it was a private entity. And a big part of that is moving it away from a platform that's dependent on advertising. You know, in these kind of big thinking conversations with Jack Dorsey about Twitter's role in a global democracy, they wanted to remove outside influence, and the ad market doesn't allow for it to be this kind of center of freedom of speech without it.
$13 billion cash call. Sell this to Name the Firm this morning. How did they get a preferred coupon? How does this actually happen with a company that essentially makes no money?
I think that's the biggest risk right now, right? It's a $44 billion deal, $12.5 billion of debt split between unsecured, secured bonds, and a $6.5 billion loan, and the kind of standard $500 million revolving credit line. He had all these equity financing partners lined up as well, but the world was a very different place in April. And, you know, I guess the question for these co-partners, who are many of them well-known associates of him, is how much do you trust Elon Musk going into a deal like this based on the behavior of recent weeks? Because frankly, you know, I don't pretend to understand the psychology of Elon Musk. We don't know why he U-turned and did this in the last 24 hours. One source tells us it's because his legal team looked at the Chancery Judge, Kathleen St. Jude McCormick, what she'd done in the pre-trial hearings and conferences, and said, we ain't going to win. So, you know, it's pretty precarious as deals go, but it's happening.
Contingent on debt finance is happening. Have we heard from the banks involved in any of this?
We haven't heard from the banks, but you'd imagine they're nervous. Leveraged debt is a hard sell right now. And those banks have got to go to the asset managers and say, not just that this is an attractive proposition, and the banks themselves end up with some significant loss, particularly on the unsecured portion, I'd imagine. But also, they've got to sell the vision of what Elon Musk plans to do with Twitter in the long term. And remember, this is a man that's gone on stage and said, I don't care about the economics of Twitter. I'm not doing it for financial reasons. What you're saying is critical,
particularly with the memory of deals 20, 30 years ago. Are you saying there's a risk here, pick on Morgan Stanley, that they end up with this debt on their trading desk because they can't sell it to their asset managers, their institutional managers?
Exactly. And I think that we've done the math that there's $51 billion of leveraged debt sitting around out there in a pile. Twitter's $13 billion or $12.5 billion of it. it's a big chunk of the risk in the market right now.
Just absolutely terrible. And Lisa, you know the Citrix deal well of the last couple of weeks. This is a bad time to be pushing this stuff.
Yeah, there's one estimate that there's more than $50 billion of leveraged debt that banks have to sell of unsecured. And the issue is that you're not seeing that much being sold into the new issue market. So any supply, let alone $50 billion of riskier securities, could potentially really cause a disruption in a market that's already tenuous.
Lisa, explain what leveraged debt is. From your mortals like me, I'm like, huh?
Okay, basically, it's just debt to finance a company that has a very high, relative to other companies, debt to income ratio. Debt to equity valuation ratio. That's the inherent leverage in a company. That's why they are riskier, because it takes more years of profits to actually pay down that debt. And what you have is right now, people are concerned about financing a company based on valuations of, say, a year ago or even 4 months ago, given how much the market's moved away from that.
And we've stripped out the $12.5 billion margin loan component, which was originally in place, right? And he went with the higher proportion of equity financing. But even so, that's what I'm saying. If he's going cap in hand to partners to co-fund this, they'll look at the debt, but they'll also look at the track record of recent weeks and say, I don't want to be involved anymore. I don't know.
The deal back in April, I think had a maximum interest rate of 11.75%.
Yeah, we're probably way through.
Triple C debt is trading about 15%. So compare and contrast where we are. It's the unsecured piece of this that's highly problematic for these banks.
Especially at a time when other companies are not really selling that debt, right? So that's the mark-to-market price, not necessarily with fire sales of credit investors, but just where things are implied. It's not necessarily tested in the new issue market because there have not been those triple C issuers that have come to market. This is the big issue. People see this as a potential systemic risk, not in a massive scale, but at least to disrupt the credit markets if banks are forced to sell $50 billion. Not just Twitter, but more broadly.
I like the way we've framed it this morning here at Bloomberg. Elon Musk has revived his Twitter bid.
Well, aren't we just back to square one?
Precisely. Precisely.
Sorry.
No, precisely.
I feel a real sense of deja vu, John. I'm sorry.
I think a lot of people do. I think to sit here to say it's going to close imminently, it may well do. But I think the accurate way to frame this is the deal has been revived by Elon Musk.
You know, pick your framing. Right now, it's hard to take this too seriously based on all of the things that have to happen. That's the reason why you are seeing that discount in markets. You do wonder who's made the most money from the arbitrage here. What are the banks thinking right now? Who had a sleepless night last night thinking, oh my gosh, how much are we going to lose? I mean, really, these are the tangibles of the ripple effects of this kind of announcement.
Fascinating moment.
Yeah.
He did well, that's for sure.
Sources tell us did very well.
Ed, good to catch up. Good to see you. Thank you. Getting some headlines as well from Liz Truss, the British Prime Minister, who goes on to speak at the Tory Party conference in Birmingham, England. The priority is to lower the UK tax burden. Tom, economic growth hasn't been strong enough in the UK. We've heard that a few times in the last couple of weeks.
They're making up as go. I thought the Telegraph, John, had a great article today for dummies like me of the 5 parts of the Conservative Party. Which part is she speaking to today in Birmingham?
Birmingham. You're nailing that. I'm proud of you.
She's not speaking to the Sunak crew.
Certainly not.
The Johnson crew.
Maybe that's what the song was about, Tom.
I don't know. Who's she talking to? I can't figure it out. Is it him? You're the pro.
Amrita Sen's going to join us on the energy market from Energy Aspects in just a moment from New York. This is Bloomberg.
CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Live from New York City, good morning to you. Here's the price action worldwide, kicking things off stateside with equity futures negative on the S&P, on the NASDAQ 100, following a big two-day pop on the S&P, the biggest since April 2020. We're down 0.8% on the S&P. On the NASDAQ, we're down 0.77%. In the bond market, yields down, 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 and then up again. 2s, 10s, and 30s. 2s up 3 to 412.54. That's just the ride. I'm explaining the roller coaster, Brown.
That's really fun.
All right. 369.88 on a 10-year, up around 6 or 7 basis points. Still well off the highs of last week, through 4% last week, and we come back down again. And wrapping things up in the commodity market, can we just talk about crude? We're now talking about a 2 million barrel a day cut at OPEC Plus, and some real pushback based on reports, Lisa, coming from the United States of America, unhappy about the prospect of OPEC Plus doing just that.
There's been some rumors of possibly even releasing more from the SPR, from the Strategic Petroleum Reserve, to offset the cut in production. But this is not what they want to see, especially ahead of the midterms.
And Tom, maybe even constraining exports.
Yeah, the export dynamic and frankly, in every country, I think it's political. Frankly, in Russia, it's political. There's some real nuances there, and that's what we hear from we're going to have Amrita Sen here in a moment. And
Looking forward to that.
I think she's really, out front on that as well.
We've got a man in Vienna right now, Bloomberg's Manus Cranny, a good friend, my good friend. Manus, good to catch up, buddy. Walk me through what we're expecting through the next couple of hours.
Jonathan. Welcome to the Central Bank of Oil. Welcome to the bowels of OPEC. This is where the decision is going to be made. Yeah, you talk central banking on your show all the time, like the analogy. They're going to come here, they're going to talk about perhaps a monster pivot and a monster cut of up to 2 million barrels a day. Now, is that going to really change the narrative and change the dial? Maybe in real terms, it's going to be a reduction of around 900,000 barrels on the market out there. But it is re-grasping the narrative, redefining the forward guidance by His Royal Highness Prince Abdulaziz bin Salman, the Saudi oil minister. And to the point that you've just made, they are ouching like heck in the White House. Bob McNally is here from Rapid Energy in the audience in front of me. He came on the telly this morning and he said they're panicking in the White House. They flew to Saudi, they fist bumped His Royal Highness. And what do you get? 2 million barrels a day of a cut. Then Masroui, the Emirati oil minister, we doorstepped him. We will not use OPEC as a political organization. Recession. Recession is the risk. Recession is the moniker for this 2 million a day cut that they're putting on the table. By the way, in the report, in the OPEC report, we're going to expect a demand growth of around 2.7 million barrels a day, and they're cutting into that.
Manus, just quickly here, is the Russian energy minister there, and how political is that?
On his way, yes, it is political, but he is the oil minister, not the gas minister. And to a certain extent, yes, your country has sanctioned him. The Europeans have not. This is about really a solidarity with Russia from the whole of OPEC. That is going down like a sack, quite literally, on the other side of the world. Maybe we're overplaying it. He's not sanctioned, and therefore he is free to come here. But you can be pretty sure of this. When the next set of sanctions kick in on Russia, you're looking at what's Russia going to do with about 2.7 million barrels a day of both oil and product. That's the start of December. That is the next shoe to drop in terms of the supply narrative here at OPEC, the Central Bank of Oil. Good morning.
Manus, good morning. You're the best. I miss you, buddy. It's good to hear from you. Manus Cranny there from Vienna on OPEC+. Manus, thank you very much. Brent crude 91.83, WTI 86.50. I think it's fair to say this could be controversial a little bit later this morning, Tom.
I think it's the memory of 1986. Joining us now, Amrita Sen of Energy Aspects as well. And how much is the ghost of 1986 in Vienna, Amrita? And the OPEC got their clock cleaned in 1986. How much are the Saudis afraid of that?
I mean, I wasn't around then, but whatever I know of that 86 cuts, I will say this much is that I don't think that's the playbook Saudis are using right now. Prince Abdulaziz has been very, very clear about a few things. And Mana said that, like, they are talking about recession, the stronger dollar. My conversations with him in particular highlight how frustrated he is and the group is about the disconnect between futures and the physical market. I do think a big part of this cut, remember he mentioned he'd written that big piece, it was an interview with Bloomberg, where he talked about OPEC could do anything really to close that gap. And he's trying to do exactly that, get the shorts out and kind of close this gap to the physical market.
Within your brilliant research note, if Saudi Arabia goes unilateral, and if they go marginally less than 2 gazillion, they go to something, to appease everybody in the cartel and all that. What does the price of oil do? What is the jump condition here from, say, 90 a barrel?
So my understanding is obviously technicals have played a very important role in the last $20 move down, and therefore they will play a very important role in the move up because it hasn't been driven by fundamentals. It's just been fears of various things. The backwardation of the crude curve remains extremely strong, which tells you that fundamentals are still very robust. So if Brent crosses 94, then we could be very quickly back above $100, but that's going to be a key resistance test. Now, from Saudi Arabia's point of view, they see this move as defensive. They believe if they don't cut big, prices could fall to $60 or $70. So regardless of what you and I think, Tom, I think it's very much about their belief of what they are doing.
What Amrita just said there, Lisa, is 1986. It's like, think of Japan and central banks. It was back in the 90s, which I believe were the 2000s, where Japan screwed up. That is precisely the collective memory of the royal family in Saudi Arabia. Don't do 1986.
What's different this time is they have also the excuse of perhaps they don't even have the capacity, the spare capacity to produce more. And Amrita, we have been hearing that as a peripheral reason for why to do this cut now. From your on-the-ground research, how much is the move driven by an expected